What's up, traders? How we doing? How's everybody's day going? So I just wanted to come in here really quick to let you guys know that we're gonna be starting here in about I don't know, 25 minutes, something like that, with Matt Maley, Chief Market Strategist. So do whatever you have to do. Make sure you're paying attention when we get started. We're gonna talk about the markets. We're gonna talk about things that are happening out there, trades that we're taking, not only what's happening out there, but how we can profit from what's happening. Right? Enough of just complaining about what's happening out there. It's time to make money out of what's happening out there, right? So that's what we're going to be here doing, showing you a couple trade ideas, education, all that stuff. So 25 minutes, guys. We're going to get this started. Just make sure you're here when we start, 5 p.m. Eastern, all right? We'll see you here in a bit.
streets. The shadows broken, swept away, swept away, swept away. Shadows broken, swept away, swept away, swept away. On the streets, the shadows broken, swept away, swept away, swept away. In valley, some people cheap trick. A lie in your bed is all too sick. Trust your body and your head. In valley, some
What's up, everybody? I see a whole bunch of you guys on the YouTube side. Just wanted to pop in here, say hello, and let you know that we're going to start in 18 minutes with Matt Maley, Chief Market Strategist. I'm sure you've already seen him here. You already know what what he's about, right? Making money in the markets, trading the volatility. That's what we're doing every single day. I'm getting tired of coming out here and telling you guys how much I'm making on my trades, but for all you guys that have questions, make sure you leave your tickers at the end. We're gonna go over that at the end of the session. We're probably gonna be here for maybe an hour, 2 hours, maybe give or take, as long as Matt wants, right? And just feel free to participate, engage. We have a great session planned out for you today. We work really hard to give you these sessions and give you value out of this stuff. That's why we're here. So participate, engage, make it a special day, right? We're going to start in 17 minutes, guys. We'll see you in a few, all right? All right, ladies and gentlemen, degenerates, apes, bulls, bears, welcome to the session here. We have an amazing, amazing session here planned. I was just on the phone with Matt talking about a couple things. And man, it's been a great couple weeks in the chat room. I'll tell you that. So we're going to be here with Matt Maley, Chief Market Strategist from Miller Tabak. He's pretty much an analyst. He's been an analyst for about 15 years at Miller Tabak. Before that, Director of Trading at Merrill Lynch, managing two of the biggest funds in the world, Fidelity and BlackRock. And then prior to that, he was trading at Solomon Brothers, which was the most important trading desk in all Wall Street for decades, 70s, 80s. Matt Maley has about 40 years of experience in Wall Street, more than what many of you, including myself, have been alive in this planet. So he's a great mentor, a great educator, a great teacher. He makes the chat members a lot of money too, which is awesome. And we're going to be talking about a couple things, guys, today. Okay. Trade ideas, education. We're going to talk about current market events, right? What does Matt think? What Matt is looking towards the economy? There's a lot of things that are happening now as far as, GDP revisions, layoffs, hiring freezes. There's a lot happening in the markets. And basically, Matt's going to break it all down for us and tell us how we can profit. Of course, if you do want to take it to the next level, join the chat room. There's a 7-day money back guarantee. There's no reason why you're not there, to be honest. So Matt's going to be here in a second. He was in a call from what I understand, but we're going to get this thing started. In the chat, I need you guys to let me know when you are good to go. That's why we have a timer. That's why we do all the stuff, so we can make sure that everybody's here paying attention, right? Attention is a currency, right? People want it. And I'm telling you, you want to use it right now. You want to pay the attention here. So without further ado, I believe we have the man of the hour, Matt Maley. Let's go.
Geez, how you doing there, Rodrigo? I apologize for being a minute or two late. I literally had an old computer up, and I was like, "What the heck's wrong with my?" And then I realized it was my old computer, so I had to switch computers and get back on here. I apologize profusely.
No worries, man. It's been a while since we talked, man, and so much has happened in the markets. I mean, obviously, you guys, you're banking in the chat room, but we want to hear from you, Matt. There's a lot happening in the markets. Nobody trusts, CNBC, none of those places, honestly. So you're like the light, you're the guidance for so many traders out there. But how has stuff been in the chat room, man? This past week?
Well, it's worked out. It's been a good week. It's funny because it's been a better week for most of my people in the chat room than it has been for me, because a lot of them got onto to these Amazon trades that I certainly had the opportunity to do so, and they were pushing it hard, and they've done extremely well in those. And I've been sitting here twiddling my thumbs on this one, and so I don't blame anybody but myself for that. I guarantee you that. But it was and I'll show you why. Show you some of the moves that we've seen in Amazon, which is a really good trade, because you were sitting there trying to catch movements in the stock market, but one of our members in the chat room was talking about this thing where the stock's about to split, and how the stock always does well right in front of the split, and usually most people just look at things when they get when a stock announces a split. It always goes up, and you always hear this thing about how, well, yeah, sure, the stock, sorry here, yeah, sure. Usually the stock really does well after it splits, but it's not really what it's not something that happens right before the split. And it really shouldn't happen, whether it just whatever. Well, this person really had it down to a science. We made some huge money in it, so that's worked out really well.
Yeah, and some of the folks there, I think it's Jay Trades. He was they're trading earnings, and there are people that have, like, I think it was Tiffany. There's this famous Tiffany I've been hearing made like 4,000% on target puts, or like this is stuff you just don't see out there, Matt. So I love the community, but so here's the thing, right? We were back in the day, like say maybe a month or two ago, I don't know. You and I were talking about this company called Mullen Technologies, right? It was this company that came out with like a battery, and it's like an EV battery, and it's like, we can do 600 miles, some crazy number like that. But look, it popped from 99 cents, like $4. I made some money there. We talked about it here. We talked about it in the chat room. So now, yesterday or 2 days ago, it looks like they did another study in the in Battery Innovation Center, where they actually confirmed that their batteries do last those 600 miles around there. So um, it's something that, and it's just to show you guys, because we trade options on in the chat room, but that doesn't mean we're only trade. You know, there are people that buy stocks, there are people that trade crypto, and then people that do all sorts of stuff there, right?
Absolutely, and it's it's great to do some of these options trades, et cetera. But the and but it's we're looking at any opportunity we have here. I mean, one of the things I keep pushing about is some of these three big cap tech names that I'm looking at on a longer term basis. They're Facebook, Google, and Amazon. But on a short term basis, we're looking at and intermediate, long term, whatever. We're looking at anything that will work. I mean, one of these things. There was an interesting thing. And this is going back a few years, I'm dating myself, but there was this story about how these people, this one guy way back when, bought all this land, listen, in the late 1800s, very late 1800s, bought all this land, worthless land in Oklahoma, and he said, and why would you do that? They're saying, why are you wasting all this money? It's just you can't farm it, you can't raise cattle on it. There's nothing. And he goes, yeah, but there's oil underneath it. And they're like, well, but it's too deep. You can't drill down that far. And he said, well, first of all, I don't have to pay any money for the taxes, real estate taxes, because basically it's barren land worth nothing. I'll just let it sit there for a couple of years, and somebody else will figure out how to drill that deep. I'll just let them figure it out, and then when they do, I'll let them use my land, and I'll make a fortune. Like I made millions of dollars. And this is the same thing we're here with this battery thing. Everybody's talking about, well, we're going to do this battery. Got to do. It only takes us, X amount of miles, 600. I mean, you're trying to tell me that I'm going to get a battery that can go, longer than that? Somebody's going to come up with it. So we want to invest in the companies that will be able to take advantage of it, on top of the ones who are actually coming up with that technology. And Mulan is one of those names.
Yeah, it's just crazy how you see these things. I mean, I love the markets, man, because it's just the innovation that's out there. And I mean, it's a small company, but anyways, so yeah, there's a lot of things happening in the markets, Matt. Do you want to take us over a couple of trades and things that you guys have done in the chat room, just so we can show the people your strategy and how you're able to profit from all this craziness that's happening around us?
Sure. Let me just get the share here. Let me get my thing up. And if you could see, I was, because I was so late getting on, I actually added a couple of things to my trading, so you could see what the heck was going on. Well, here it is. Okay. Let me get this up here. Boom, there we go. I'm sorry. What happened to my thing? What happened to my thing? There we go. Sorry about that. Okay. I just want to pull up these charts, and we'll just show you some of these trades that we've had and how we go about it. And don't worry, I'll be able. I'll blow it up so you can see them better. But I just need the field to kind of set itself in. It just takes a second here. But the point is, what I try to do is use fundamental analysis. And that's very important. But one of the biggest things is not to get too stuck up on fundamental analysis, especially on active trading, because some of the best trades, many of the best trades, are the ones that take place that don't make any sense on a fundamental basis, and because everybody thinks that everybody's on one side of the boat, because they know that it's either really fundamentally good or really fundamentally bad. So therefore, if it's really fundamentally bad, there's nobody left to sell it. It has nowhere to go but up. Just the opposite. When everybody's in it, they love it. There's nobody left to buy it. Even though the long-term prospects are really good, it has nowhere to go but down. And we've really been able to take advantage of that with some big trades. And the biggest one, we might as well get right to it, it wasn't even a U.S. stock. Okay, it was China. It happened in China, where we let me see if I can pull it up here. Oops, we got so many good calls now. There we are. There we go. Okay, now what we have is okay, I'm just going to blow it up so you can see a little better. This is the FXI. This is what is called as the ETF on the Chinese large cap stocks. And fundamentally everything stunk. Sorry. And it's like, the government have been cracking down on all these different technology companies all year long in 2021. And then you can see how this thing just went down and down and down. And I kept saying, stay away from this thing. Every time it popped, I said, you got to sell this thing. You want to short it, whatever. It's not going to go well. Then it came into here, and we had a situation where where the SEC started talking about delisting a lot of these stocks. So this was in March, okay? And of course, it just fell right out of bed. But then I looked at a few things, and I saw that in its RSI chart, it says last weekend's chart. This was the chart that I had in March. It obviously wasn't last weekend, but this is the chart I had in March. Most oversold ever. This is a relative index. I'm sorry, relative strength index, RSI. And when it gets down below 30, that's usually a good sign that it's getting time to bounce. See how it got down below 30 here, and it bounced right there. Here it got down, it bounced. Here it got down slightly below 30, it bounced. Look at here, it got down to 14. It'd never been that oversold. So I said, we got to go in here and not just buy it, we got to buy the calls, okay? And the call options in the FXI. The next day, the whole thing rallied well, this shows 2 days, but it was actually in 1 day, rallied 27%. It got up to about 28, 29% the following day. See how this thing went from oversold in 1 day and jumped up? Can you imagine if the S&P 500 or the Dow rallied 27% 1 day? That's basically what happened in their market. Well, we own the calls. And we bought them right there, right at the end of the day. And this is what happened. At the end of the day, on March 15th, we bought them in the last hour of trading. And by the next morning, they came in. So again, even though on a fundamental basis, the backdrop was horrible, I knew that it was so oversold it had to work. But more importantly, I also knew from experience, been doing this for 40 years on Wall Street, that the Chinese government, when things get really bad, they come in and they force their market higher. They go and not just manipulate it, they buy it with both hands. And so I knew this thing was going to go higher. So when it opened up 1,000% higher, 1,000%, okay? So it's 10 times your money, okay? It opened up about 1,000%. I said, no, we're not going to take profits yet because I know this government's going to keep on buying. Sure enough, it got to after 10 o'clock and it's up 3,000%. And I said, okay, we can't get greedy here, up 3,000%, let's sell it. So we sold half, but I specifically said only sell half because this thing, again, I knew the government would keep buying. Sure enough, by the end of the day, it was up almost 8,000%. And my position, I took my profits, all of it. Several other people held on to their positions, okay? And they made up to 14,000% on this trade. So these, again, these don't happen every week. We have had a couple that have been in the thousands. We had another one last year. We've had another one this year, as Rodrigo alluded to in Target. And I think there was another one just this past week.
Yeah, just for you guys to know, Matt Maley has the record at Benzinga for the highest percentage trade win. And guess who had the record before that? Matt. So.
Yeah, these are working out really well. And that one was, it was before I started the chat room. I was doing another stock pick, the stock pick some of you may be involved with in the tier 3 stock picks, but that's when I picked that one. And I picked the option in it in Viacom. And the stock had come, it was during the meme stock era.
Right.
Remember I told you about that RSI? Well, its RSI when it gets above 70, it's overbought. This thing got to 95. And I was like, this is ridiculous. They're not going to solve all the world's problems tomorrow. We bought the put options. This case, this one in the FXI, we bought the calls, and we bought the puts in Viacom. We're up 5,000% the next day.
And here's the thing. Here's why it's that the most important part of everything that Matt is saying is that, I don't think we've mentioned it, but you will post entries and exits with timestamps, no hypotheticals, no maybes. It's like I'm in, I'm adding, or I'm out, right?
And that's, and again, we come in, this is why people put up here, I put it into our chat room, and we also have a separate page where I put my picks. So, the chat room scrolls all day long. And so you might miss something. Well, if you miss something, I'll put in, we have a separate page. You can check in if you're off doing something else, if you're doing your job, you go into the grocery store, whatever you want to do, you come back, geez, I wonder if we've done any trades since then. You look at the trades. There are a couple other notes in that page, but not a lot. In other words, I might have 3 or 4 trades in a day and maybe 2 or 3 other notes. And they're very short, just saying, hey, this is what I'm looking at. Watch this going forward. So you don't have to scroll through anything. You see right away. It's like, oh, Matt, and it's very specific, as Rodrigo said. The FXI, okay, you know exactly what the asset is. The expiration date, March 18th. The strike price, $30. And of course, whether it's a put or a call. and we get right in there. We're not playing a lot of these. Again, there's nothing wrong with being a sophisticated options player. If you want to do these, condor spreads and a lot of them aren't as complicated as they might sound. But we really don't. I'm in there just a simple puts and calls. Once in a while, we'll do a straddle. I did do a kind of a mini straddle today. Because I think we'll get a big move tomorrow in one direction or the other. So I want to be able to take advantage of it. And that's another story. But the point is, we're very specific. We're doing. If I do a trade, you know about it, and you don't. Some people might say, "Hey, here's a good trade that I really like," and I'll do 5 of them. And the ones that start working really well, then I'll tell that's no. I do a trade, you know about it immediately, okay? And when I get out of the trade, you know about it immediately. And it's not, it's a, again, you don't have to trade exactly the way I do. You can wait a little bit. And a lot of times I set it up. I say, hey, this is one I really like. I'm going to buy it probably later today, or I just want to come down a little bit more. And some people get in before I get into the trade before I do. And then I say, geez, they've already made 100% or maybe 200%. And I say, the smart thing to do now is to take at least some profits. I'm going to go ahead and hold on to it because I have a high risk tolerance, but you should take at least some profits, things like that. And I'm not your financial advisor, so you can do what you want. I'm never going to tell anybody what that they absolutely have to do something or don't have to do something. I put the trades out there, you make the decisions, but you know what I'm doing. I don't do any trades there are no trades that I do that aren't posted. And if I have a losing trade, you know about it. And if you've lost money on it, I've lost money on it. Okay. And so that's, again, I don't pick and choose which ones I want to put out there. I put them all out there. And of course, I don't do a million trades. It'd be just too much for everybody to keep an eye on, much less myself, but very specific on these trades. And we've had quite a few more. I mean, again, you make these ones where they make 18,000%. I mean, we'll talk about what we did. It's funny because I'll talk about the ones that I missed this week. The one that I like, whoops. Okay, here we go. Did I miss it? Okay, here's the one I missed. Okay. Late last week, as I said, Tammy in the chat room, and she was talking about how Amazon, this is on Friday, talking about the stock split. And I said, geez, that's, I thought that was really interesting. I didn't play it, but she did, and so did several other people. Came in and bought the calls. Now, since I didn't do the trade, I can't claim these are the numbers that you could have made. Okay, they got it in the last hour, so it was trading at kind of a tight range. If you sold at the absolute top on Wednesday, because remember, Monday the market was closed. So this was Tuesday, you made 1,500%, okay? The chances that you sold it right at the top, and nobody in the chat room claims they sold it at the top. But what they did do is they sold it here. I picked this here because I knew this was about when some people sold. It's about a 500% gain. Others sold it in here, they made 200%. Other people bought it back on dips. And then they've made this trade several times. And again, you can see you go from down here at 15, you sell at 30, and you don't have to be a math whiz to know that's 100% gain. They've had several trades in here. So I guess my point I'm trying to say is that I'm really proud of some of the trades I've been able to make, maybe some great trades. Here's one that I wasn't involved with. This was it's not just my ideas that get in there. You get ideas from anybody, all these people in the chat room. They're willing to help people. They're like, hey, what do you think of this? What do you think of that? And I would really love to be pounding on the table saying, man, I got another one where I made over 1,000%. But that wasn't me. That was somebody else in the chat room, not me.
Yeah, shout out to Tammy. Let's go.
And then I'll show you another one, AMD calls. Okay, now here we had AMD calls yesterday. I bought them. And I bought them right here, not long after the opening in the first half hour trading. And I usually don't do that, but it wasn't a huge trade. But here it is, towards the end of the day, I sold them. But I told other people, you do what you want to do. Other people held on to them. Okay, I actually lost a small amount, very small amount of money. There was more in here. Okay, and I didn't put a lot into it. But these people made 146%, and if they held on longer, they made even more. But this is where people were telling me that's where they were making their taking their profits right there. Other people bought it in the morning. Okay, and made even bigger returns because they bought it down here right near the opening. And again, it was my idea. I didn't follow through on it the way I should have. They did, and of course, they didn't hide it from me. They didn't come out and tell me, "Oh, by the way, you idiot, I held on to my stock." They said, "No, I'm holding on to mine." It's like, great. You go ahead. And that gave confidence to other people in the chat room to stick with the trade, and it worked out really well. And then other people came in, and they were more bullish on the market this morning than I was, and they jumped on this trade this morning after making money here, or even maybe even losing a small amount. And then they took the trade and made a huge print. And that's what we can do in the options market, okay? You can lose, what we try to do, and as Rodrigo's talked about, is that a lot of times I will work my way into a trade. I'll buy something and we'll get my feet wet and buy a little bit, buy a couple of contracts. And then as it moves up, I'll buy more because then I have much more confidence. And then we build a position. We don't necessarily buy it all once because to get the exact level is really, really hard, the exact bottom or exact top. And so we build up certain positions, and this has enabled us to make a lot of other, that was that Viacom. This was the Viacom trade I was talking about earlier that we did. This was in 2021. See how the stock had dropped 60% in a day, and we made over 5,000% on our options. But these other ones, oops, I went the wrong way, sorry. Here, just, the end of last week, May 27th, these are the TQQQ. That's the leveraged ETF on the QQQs. What are the QQQs? They're the ETF for the NASDAQ 100, which has all the, the biggest tech stocks in it. Okay, so hold on a second, I keep going the wrong way, I'm sorry. Okay. But here we came in, and it was a day trade. I thought the market was getting oversold on last week. In the middle of last week, we came in and bought these options up 100% before. I mean, literally at the end of the day, I was like, we only got 15 minutes left. I'm sorry, we only got about half an hour left in the day. I want to get out of these names. We sold them for a profit of 100%, doubled our money in basically 2 hours. But keep going the wrong way, sorry. Now here, okay, and that's a similar thing we had the week before. Again, we try to do this on a consistent basis. We don't get 1,000, believe me, we don't get 1,000% every day. But we get, we have these stocks where Amazon this week, Amazon, AMD made real nice returns for us, over 100%, well over 100% in a couple of cases with the Amazon trade. And then, again, SQQQ. Okay, now here's a situation. Remember I told you about this? Here, we bought the QQQ calls, okay? That's a bullish trade, okay? This was we made on May 25th. Look what we did 2 days later I'm sorry, oops, okay, I'm sorry. And the week earlier, we made it on the SQQQ call. Okay, that's actually a bearish bet, even though it's a call option. It's a bearish bet because the SQQQ is an inverse ETF. Again, we made 100%. We're looking to make this kind of money in both directions. Here's another one where we make a call option. Back again, early. Now I'm going back to the previous week. May 27th, 287 calls, 174% on our money by the end of the day. Could we have made more money than the next day? Sometimes I can't worry about it. It's like I make 174%. That's almost 3 times my money in 2 hours. It's like if people beat themselves up for not, for not taking, that they should have held on to the next day. They're just going to drive themselves crazy. And to be honest with you, I do hold on to things overnight, and I'm holding on to some ones tonight. But again, this goes back. I apologize. I keep going the wrong way. Here's another one we had back on May 12th. Again, going back. So now I'm going back 3 weeks. So we had some this week, last week, 2 weeks ago. Now I'm going back 3 weeks. And we came back with what happened. Remember during the week of when the cryptocurrencies were all getting shellacked. Well, I knew that what was going on. I knew that these things were getting major league margin calls. I also knew a lot of these cryptocurrencies were not very liquid. And so when they were getting their margin calls, they couldn't sell enough of their cryptocurrencies because not all of them are as liquid as Benzinga, as Bitcoin. And so they had to turn to the stocks that they own. Now, if you're buying Bitcoin and you're investing in Bitcoin, you're not, I knew they weren't buying General Motors. They're buying tech stocks. And you could just see the way Apple was getting crushed. It was down 10% in 2 days with no negative news. I'm sorry, Apple doesn't go down 10% in 2 days unless there's something specific. They come out and say their iPhone sales are down or whatever it may be. There's no negative news anywhere. Stocks down 10%. I knew they were using Apple as a source of cash to get to raise money for the cryptocurrency margin calls. But then I saw that the cryptocurrencies were finally starting to stabilize on the 12th. So I went in at the end of the day and I said, let's buy the calls. We were aggressive on this one. buy the Apple, again, specific trade, the asset, the stock, Apple, the strike price, May 13th, the expiration date, May 13th, the strike price, 143, bought it here. I wish I held on to it longer, but we made 414%, 400%, okay, in a matter of hours. I mean, this was on one day, it wasn't until the next day. But again, if people want to beat me up for not holding on up to there, anybody who tells you they get the bottom and the top every time, they're lying. Run away from that person as fast as you can. At the same, you can see what happened at the same, this was see what happened at the same time. Remember I talked about how we bought the Apple. I knew what was going on with Apple, and we said to ourselves, hey, wait a minute, if Apple's going to rally nicely, you know that the TQQ, you know that the QQQ, the broad NASDAQ ETF was going to rally strongly. So we also bought the TQQQ May 13th, $29 call. So again, the ETF, the security we bought, the expiration day, and the strike price, and of course, whether it's a call or a put. This one, again, we bought it a little bit before we bought the Apple, and we made 600%, okay, again, by 11 o'clock the next day. These are the types of things, when in this kind of volatility, these are the kind of money we can make. It's just, and again, I'm going back, there's more and more, I don't want to just bore you to death here, but we get involved in these because the QQQ is so volatile now with all this movement in the marketplace and in the technology stocks. Again, here's a 78% gain. I mean, geez, that wasn't 2,000%. No, but 78% in 2 days, that's a really nice gain. And I don't pretend, again, here's another one. Well, this is May 6th, not May 6th. You can see 71%. We don't pretend to make hundreds on every single one, but again, earlier in the month, so we go week by week. We get each week we're able to find some nice ones. This was a 220% gain in the QQQ, and you'll see here. So we made them both. Okay, here's what. Yeah. So we made it here. We made over 200%. I'm sorry, and then again we're going back to April. I'm just giving you other situations here. Where at the end of the day, we try to, every once in a while when a market gets really interesting, it gets knocked down a lot or gets really reached a lot, we go in and we buy these options. And sure enough, this one made 200% in 2 days, right? We bought it on a Thursday, it rallied the next day. I held on to it over the weekend, which I usually don't do, but I really felt confident about this one, and we made 200%. And the reason why I keep showing you these different ones is that whether it be Apple, whether it be Amazon, Advanced Micro Devices, we do a lot in the QQQ and the SPY, which is, of course, the S&P 500 ETF. Those things are very liquid, and we can do very well. But the key right now is we are in a stock market where it's going to continue to be very, very volatile. It's going in both directions, but we now have the tools to take advantage of both directions. And not only that, we only be able to make it on the upside. Well, now we can make it on the upside on a shorter term basis, and we can make money on the downside. Why is it important on a shorter term basis? Because if you came in today and you really wanted to buy the Advanced Micro Devices, you would have had to gone out at least 3 weeks to buy the call options in that. That would have been because they only expire every quarter. You would have to go out 3 weeks to the quarterly expiration. But and of course, if you wanted to make the same bet a month ago, you would have had to gone out 8 weeks or 7 or 8 weeks. And that just gets very, very expensive because there's a time value. Of course, when a person who's selling you that option, the longer they have it for, the more risk they're taking. So the more they charge you for it. It's called a time premium. And it makes total sense. I mean, if you're taking the risk for longer, you're going to charge more money. But now you have things that all these major stocks, they all have options that expire weekly. Many of the medium-sized stocks have options that expire weekly, and all of the index stocks. The reason why we like to use these sometimes is that they have options that expire Monday, Wednesday, and Friday, 3 times in a week. This week, of course, was a holiday shortened week, so it was still 3 times, but it was Tuesday, Wednesday, Friday. But the point is, if you see a real extreme, when you see these violent moves, and you see it, Jesus has gone too far in one direction. I want to make a quick trade on this just for a couple of days. You can do it, and it doesn't cost you an arm and a leg to get into that trade. And the next day, if it's not working, you can get right out of it, or a few hours later, you can get right out of it. Take a minor loss and move on, and let the good ones ride, and even add to them as they move up. And it's interesting that we talk about that because, I talked about how we bought this late in the day and we do some late day trades. Tomorrow is going to be interesting because, why can't I? Okay, hold on a second. Okay. I'm trying to hit escape. There we go. Okay. Now I'm going to get over to my Bloomberg screen. Let's see here. And look what we have here on the, oops, I mentioned the QQQ. This is again the ETF for the S&P. And let's just go and show the daily chart. This is today's chart. Equity. This thing just rallied straight up and closed right on its highs of the day. Okay, that looks great, but there was no news out. If anything, there was negative news out today. Microsoft pre-announced with talking about that they're not going to make the earnings. Now they mostly blamed their currency issues, but this is the beginning of what we're going to see, of a big long line of downgrades and pre-announcements going into the next quarter earnings season, which begins in July. And we've seen GDP and economic growth estimates get cut by more than half since last October, and yet earnings estimates for the S&P 500 haven't moved at all. Okay, they have not come down at all. Okay, it's not going to last. I mean, we're already just now finally starting to see the numbers move a little bit lower. We saw that last week. You're going to see that happen more as we move through June. And this is going to create all this volatility. And what we did today was I went out and I'll show you another thing here. We went out and bought some puts late in the day, just because I just think that this thing is getting a little extended up. This big rally here, it seems to be, how many days in a row can this thing rally? It took a little breather in the middle. It's going to be hard for this one. And if we have a negative number tomorrow in the employment department, the market's going to get hammered, and we're going to make a lot of money.
Before we get into all that stuff, I'm getting a lot of questions about the chat room, Matt. So I'm just going to, get this out of the way so we can get back here on the lesson. So we have that barber can cut. He says, I crushed those earning puts, then smash earnings calls. Turn around, bagged Amazon calls for 245%. No complaints. Someone did sell at 800% on Amazon calls. Easy money, that barber. Now I'm writing AMD calls. They're already a home run. I'm still in them. So congrats, that barber. He's a member of the chat room. Dana, question, is the chat room open all day? Yes, it's open all day. Michael DeSesto, I'm a member of the site. Matt's the real deal. I recouped the cost of the membership within days of joining. Literally within his 7-day money back guarantee. And we have a lot of fun too in the chat room. People pop in and out through the night and day. It's packed during the trading hours. So it's our own chat room. But yeah, let me just go over these questions because those were some of the questions from the chat. But you guys have been emailing me. It looks like you guys definitely want to hear more about this. So I'm just going to go over these questions that you guys sent me. All right, 1 second here. Okay, folks, so these are questions from you guys, from the viewers that you have sent me, okay? So does Matt go over member trade ideas? He discusses it with them. It's a conversation. So yes, we do that and more. Let's see, sessions on Tuesdays. Are those sessions on Tuesdays that you have, Matt? Those are from 11 a.m. Eastern, right? Till noon? And
yeah, but they tend to go longer. They tend to get.
Yeah, I've heard. So so Matt has full flexibility there. He can make it longer depending if there's a lot happening in the markets, like Matt will break it down for you. So yeah, we have a session on Tuesdays just for the chat members. It's pretty much like what you're seeing here, but it's private. You can't see it on YouTube. It's just for the members. So what is the chat room schedule? We went over that. It's all open all day. Let's see, money back guarantee. Yes, there's a 7-day money back guarantee. The price at renewal is going to be the same as it is today, 70% off. That's until midnight. And yeah, we have the sessions on Sundays, and everybody that joins will get a free laptop. So I think that covers everything, at least the majority of the questions that I have here. But if you do have more questions, send an email. I'll post the contact. And if you want to join the chat room, right now, so that you can trade with us tomorrow, pop in there, click on the link. It's going to take you there and you can join us, right? So I think we're good there, Matt, with the questions, unless you want to add anything there.
Right. No, the only thing I just mentioned too, though, is the what we try to do in whether it be in the Tuesday call or whatever, is to try to be educational as well. Why? I mean, today somebody said, somebody asked, why in the heck is the high yield market? We had some real nice calls last week when we made some really nice money buying, going long the market. I thought the market had become extremely oversold. And even though I'm bearish on a longer term basis, intermediate term basis, I really thought the market would bounce. And one of the reasons why was because the high yield market had become extremely oversold. And that worked out incredibly well. And as I mentioned, some of the people bought the HYG call options and made over 1,000, I think it made 2,000%. But the point is that, so then somebody asked today, he said, can you remind me why is the high yield market important? And I talked about why it was. And briefly, I'll just tell you that it is a bond market, and most bond markets trade off of treasuries. When prices go down, corporate bond prices go down, and municipal bond prices go down. Those yields on all of those go up. And vice versa. But the thing is, the high yield market doesn't really trade that way, because the high yield market is much more tied to the economy, and so therefore it trades with economic growth, like economic growth up and down, just like the stock market does. And I mean, you think about it. Microsoft, if they, or Apple, name anyone, if we go into recession, they're not going to have any problem making their coupon payments on their bonds. They have corporate bonds, they're investment grade bonds, and they have plenty of money to pay off, make sure that their dividend gets paid and make sure that their bond payments get paid twice a year, every year. There's not going to be any problem. So those bond prices really move with the treasury market, okay? The high yield market, though, that's a lot of lower quality companies. They're just getting going. They're just trying to get started. In many cases, getting started, and so if the economy breaks down, and that means their business is going to, they're not going to have enough money. They may, first of all, they may go out of business, but number two, they might. Much more likely is they won't have enough money to make those coupon payments. They won't be able to pay service their debt. And so, they'll default on those bonds, much more likely to default on those bonds. So they trade with economic growth, just like the stock market does. Now, it's not a tick for tick trade, not every single day. Sometimes it can be close to that. But I do watch the high yield market for that reason. And it gave us a great indicator of when to buy the stock market last week. And again, we made, starting 2 weeks ago, at the very end of the previous week, when we made 600% on Apple calls and 400% on the QQQ calls. So the educational process is also heavily involved. We talk a lot about different technical analysis. I mean, the key thing, as I said earlier, if you rely only on fundamental analysis, you're gonna be in trouble. That's number one. Number two, most technicians, they are strict technicians. They don't even care about the fundamental analysis. I try to incorporate it all. Technical analysis, fundamental analysis, sentiment, positioning, etc. Because the guys who are the strict, they'll tell you right off, strict technical guys, they're just trying to catch the 70% in the middle, all right? They don't really try to tell you where the tops are. But I try to use if you combine all of them, you get a much better idea where the key turning points are. And that's when you get the big money. If you waited to buy that FXI, the FXI call option, and they probably, oh, geez, I did great. I made 300% of my money. That's great. We made 5,000, 8,000, 14,000. That's what you really want to be able to do. So, and again, like I said, all too often, especially nowadays with these big swings in the market, the sentiment shifts one side to the other. And people were asking me, every time how could you possibly think that I was negative on advanced micro devices earlier in the year. I said, how could you possibly think that advanced micro devices is going to go down? I was like, I have nothing against advanced micro devices. It's a great company. It has a great management team. But the stock, there's a difference between a company and a stock. And it's stock. Sometimes its stock gets way ahead of itself. I mean, Amazon, Google, Tesla, every stock, Apple Computer, every one of them it's been such a good story that it gets too far ahead of itself and it has to correct. I mean, Amazon's seen two dozen corrections of 25 to 60% in the last decade. okay? And yet they've gone on to change the world. Stocks get ahead of themselves. So this was Advanced Micro Devices, and the stock was trading up here. Said, there's no way it can go below 100. Well, I said it could, and of course it did. It went 14% below 100. And then earlier, and this is why I turned bullish on it again, because it broke back above the 100 level. Also, its 50-day moving average, which is this yellow line, and we looked at some other things, and that's why we got really bullish. Now, look at it now. I'm getting a little worried about it because let's look at another line. Let's take this out of the way. Again, we'll see what happens tomorrow because we have the unemployment report. But see, this is the 100-day moving average. See how it got down close to it there and bounced? Got down right to it, slightly broke it, bounced. And when it finally broke below it, it got killed. But as we always know, old resistance becomes new support. And that 100-day moving average got right just above that line, failed. Just above that line, failed. It failed badly. Got up close to that line, failed. Now it got just above it, just like it did here. What's it going to do? I don't know. I'm not sure. But if that employment number could be very important tomorrow, if it's a number that's bullish for the stock market, this thing could run really, these shorts could get squeezed even better. Because look at it. You got a higher low, higher high, higher low, higher high. This thing could really run. That's one of the very basic things in technical analysis. Higher lows and higher highs are positive, lower highs and lower lows are negative. And this is a nice little thing it's developed over the last couple of weeks. It's starting to get a little overbought. It's not there yet, but it didn't get all the way overbought here or here before it rolled over. So I'm starting to get, but I'm going to get a little bit nervous here. So, but tomorrow this thing should see a big move. If it holds and breaks out, the shorts will get squeezed. Not that it's a highly shorted name, but there's just shorts in the general marketplace. And it'll go real higher. If it rolls over, it'll do just what it did the last couple of times it got to the 100-day moving average. It should roll over pretty hard. But again, this is what we're talking about all the time. We're not just talking about trade ideas, but what we're doing, why we're doing, but more importantly, why we're doing it. And whether sometimes it's technically based, sometimes it's totally fundamental, has nothing to do with fundamentals. In fact, I'm going against the longer term fundamentals. That's when you can make some really great money, as I've shown. So that's what we're trying to look at. But the thing is, when too many people get on one side of the boat, everybody gets bearish, everybody gets short the stock. That I don't care how bad the story is. It has nowhere to go but up, and that's when you can really make the best money. And the same thing in the other direction, which we made back here when Tesla earlier this year. Late last year, I should say, when I was saying the stock would trade back below 1,000, and some of the people thought I was absolutely out of my mind. And again, I said, they didn't think it was possible. Say, if you bet against Elon Musk, you're out of your mind. I said, I'm not betting against Elon Musk. I'm not betting against Tesla. I'm betting against Tesla's stock because look how overbought it got over here. This is what see how crazy. I said, it doesn't matter. And I was saying, how could you say it's impossible when the stock has seen 40, 50, 60% pullbacks in many, many times in the last few years? Just because the company's doing better doesn't mean it can't still. When people get too excited about things, it takes them too high, they have to come down. No market moves in a straight line. Apple Computer last year had 3 or 4 moves of pullbacks of over 10%. 10%. Wait a minute, I thought 2021 the market went straight up. It did. It went in a straight line, basically. Lower left, upper right, just straight up. And yet, this is talking about the S&P, only had one correction of 5%, and that only lasted one day. It only got down to that low one day and then bounced right back. But Apple had 3. And then as we went, actually a 4th one as we went into early this year. And it lasted into the rest of the year. So the point is, take advantage of these situations. And like I said, we have the tools to take advantage of them. Now, I just want to talk a little bit about what I see in the marketplace here over time. And people are, we have just seen it too many times and before. And this is what's happening again. We are in a bear market. We are going to a recession. Very little doubt in my mind that we are going into recession. In fact, I believe the Fed knows that we're going to go into recession. I mean, you listen to what they say. I mean, they're saying, well, we're not so much concerned about a soft landing as we are of a safe landing. And then that was one guy, the Philadelphia Fed president, said that. And then this week we had even Waller, who was saying, well, he was a very hawkish comments, but he said, I am confident we can avoid a severe recession. okay, well, that's great that we can afford a severe recession, but that you're not discounting a normal recession or even a light one. And either way, the stock market will go down, because the stock market coming down this far is not pricing in anything in terms of economic slowdown. Okay, all it has done is priced in the change in policy from the Federal Reserve. The Federal Reserve added too much the emergency level of stimulus that they put into the system, and that was what was needed. They absolutely had to do that in March of 2020. But then as the economy was coming out of the emergency, they kept that emergency level of stimulus going. So when they pushed the stock market up with that stimulus and the economy started coming back, well, then all of a sudden they just kept going because they didn't gear it back. They should have let the thing come down and go more in balance. Instead, it went up to 22 times earnings, the second most expensive stock market ever, and the most expensive ever in price to sales and market cap to GDP, which is Warren Buffett's favorite measurement. And so it had to come down, even if the economy never showed any signs of slowing down, which it obviously has. No, and we didn't even have, if we didn't have any inflation, they would have had to remove that stimulus at some point. Otherwise, we would have created a kind of a 1999, 2000 style bubble. And you can't recover from that, not with the level of debt we have in the world today. We weren't in a debt bubble back then, we are now. So the market was always going to come down, but it's still trading at 17 times earnings. People try to say that's cheap. That's not cheap at all. That's barely fairly valued. And that's only if you look at the last 10 years. If you look at the last 50 years, which includes several periods of very, very low interest rates, you'd be looking at 15 times earnings, at least looking at 16 times earnings, even with interest rates where they are, to get down to fairly valued. The problem, more importantly, is that this is the most highly leveraged market ever. Margin debt levels are much higher than they were right before the great financial crisis, and even more than that above the .com bubble crash. So all this leverage took the market way above its fundamental values, and as it comes down, and especially now that we're seeing the economy starting to slow, that fundamental level, the fair value is going to be lower, and the price at which we reach fair value. But over leveraged markets always, let's say always, I'll take that back. They basically always go from overvalued to undervalued. When they're highly leveraged, they have to go through that deleveraging thing that gets forced selling, and it pushes to a undervalued level. So we're not even going to stop at fair value. That's what history tells us. Right. The only way we can is if the Fed shifts policy. And they've told us many times in just the last couple of weeks, they're not going to shift their policy anytime soon. And so to think that the market stop here is crazy in my mind. Therefore, we're going to have a lot of volatility for the rest of this year, and I think longer, which makes great opportunities for the kind of trades we've been talking about.
We love volatility. I know a lot of people are like, oh no, I'm gonna get out of the markets and I'm just gonna wait for rainbows and butterflies to come around. Instead, the way your approach, you take it head on. It's like, bring it on, baby. Let's make money on either way, up or down. And I think that's great because most people don't even know you could do that, and let alone do it successfully.
Exactly, and we can, it would have been great to embrace this type of thing back in 2000, 2001. But we didn't have the tools to do it. Only the institutions had that. And even if you've read the what's the name of the book? I can't forget on the great financial crisis, The Big Short. The guys who made those trades. I mean, those were big institutional players, and they could make those trades because the big firms would do those trades. They were big enough trades for them. They'd make enough of a commission on those trades for them to make it worthwhile them to enter those trades. For little people, I mean, you went in and you wanted to make $5 million trade back then. They would have said that's not big enough. That's not what you need to be tens of millions of dollars for them to be willing to do what they called an over-the-counter option trade. Now you can do these trades every day. Look, we just made a gazillion percent on the FXI, China stock market. I mean, we're trading the UUP, which is the currency markets, or you use the HYG, the high yield market. TLT we trade frequently, which is the treasury bond market. We trade these options all the time. And when people they say they want to ease their way into it because they're not that comfortable yet with options, and they'll just, okay, that's fine. You can use the leveraged ETFs like the TQQQ or right. SQQQ. One's bullish, one's bearish. But if you bought the TQQQ and the Nasdaq has rallied 8%, Well, you're up 24% because it's a 3-time levered ETF. So there's so many different ways we can use it in both directions, both down and up, because when the markets go through a bear market, you see wild swings. We want to take advantage of it in both directions. And I think as we've shown some of these trades, a lot of these trades we've done in either direction, we've been able to make money and make some real nice money.
Yeah. Yeah, and look, man, if I go to, let's say I go to a restaurant or I go to a bar, whatever, and I tell somebody, hey, man, I made 15 bands today trading the Qs, they're gonna start thinking you're selling drugs. Like that's the kind of money that it's like, wow, like I never even thought you could do that. So, because for some reason, and look, as traders, when we try to get those gains, traders will probably go trade AMC, right, or GameStop or something like that. You don't have to do that to make those gains. And you can be more consistent with this way you do it.
Right. And there's no question there's risk involved. There was one thing I went into the chat room today and said, listen, I never put, even though you can make some, I never put a huge amount of risk. That people said, they've lost, 25% of their portfolio or 50% in just a couple of days. I'm like, whoa, I think I'm a high risk taker. I would never, I don't use that kind of risk. If I lost 10% in 2 days, 10%, I'd be very disappointed in myself. That you get out of the losers, you let the winners run, and then when things aren't going well, you step back and make very small trades. We had a big couple of weeks there in May, and at the beginning of this week, and even last Friday, right. I was just like, I'm going to step back. I'm going to sit on my hands today because I don't have a good feel today. Sometimes you just have to do that. And you kind of ease your way back in, just spending, literally tiny trades. Okay, now I've got my feel back. Now I can get more aggressive again. And just wanted to mention that because some people, gosh, you hear one person asked on one of these webinars, said, would you put 100% of your trading account into one trade? And I was like, never, ever would I do that. I wouldn't. I'd say 10%. I mean, you'd have to be really, really, really confident of the trade to put anywhere near 20%, much less 100%.
And that's so important because nobody talks about risk management. And what we're doing is risky, right? It's risky, high risk. This goes for everything in the world, guys. High risk, high reward. That's the name of the game. But you're consistent, and that's the thing. Because there's traders that, for example, they want to make those gains, and the first thing that comes to head is AMC or BlackBerry, some of that stuff. But really, when you do it with this strategy, Matt, it's so much more consistent. And I'll tell you, you guys, the members, you saw me in the chat room 2 weeks ago when I was making Matt's trades and everything, and I showed you my trades, I showed you my phone, my P&L, and everything. So it's just really great that you can help people in these times. Matt, you got layoffs and hiring freezes at Netflix, at a whole bunch of other places, at Robinhood, Coinbase too. All these places are tightening up. Layoffs haven't even come yet. Unemployment numbers might not show that, but I'm pretty sure 2 months down the road or 1 month down the road, we're going to start seeing more layoffs, and unemployment, I think, is eventually going to have to go higher. I don't know. What do you think about unemployment and how they can impact?
Slowing. And there was Bill Dudley. Bill Dudley, who is the former head of the New York Fed. Now, I'll tell you right now, the second most important person at the Federal Reserve is not the vice chairperson. And the vice chair is very important. Don't get me wrong. And I'm not talking about this one. I'm just talking about in general. Always, the chair is always the most important. And the New York Fed president is the next most important. The vice chair is third. And any given time, it can be a little bit more, a little bit less, given the personality. But the New York Fed, obviously, that's where the financial center is. And they also are the ones who run the trading desk for the Fed. And he was the former. He was the last one. He's not the current one. He was the most recent one. And he wrote this week, he was flat out saying, he said, listen, they got to get the unemployment rate up. So if you want to get to 2%, 2% inflation, back down to 2% inflation, you've got to get unemployment above 4%, and that would be more than a percentage points increase in unemployment. And the last time a 0.5 percentage point increase in unemployment, the last time it didn't result in a recession was never. The last time it happened was never. Okay, every time, and again, this is Bill Dudley. I mean, verified it. It's true, but this is, a very, very important person, former Fed president, and he's basically saying, hey, guess what? Part of this of normalizing and tightening this credit is making markets go down. And he's been saying all year long, people are still not understanding what this means for the markets, and he's still saying it. This is a guy right on the inside. He's not in the Fed anymore, but and so when he's telling us unemployment's going higher, you got, and then of course you got Jamie Dimon, who's, I'll tell you an interesting story about Jamie Dimon. He came out yesterday saying, I bet people better batten down the heads, better beware because a hurricane's coming, okay, and they better prepare. And he did say, I don't know if it's a major hurricane or a minor hurricane, but it's coming, okay, and I was going to say, so, well, he's the head of a biggest bank, so he's probably always bullish. I said, he's always cautious. Like, no, if anything, he'd want to be more bullish, to talk up this thing. But we had a recession. We had a correction, 15% correction, like we've just had, about 15 or 16% in the S&P 500. Back in 2015 and 2016, very early 2016 was the end of that correction. And one of the catalysts to turn things around was when the market was down 15%. He came out and they announced that he bought $26 million of JP Morgan stock personally. Now, he wasn't a company buyback. This was for his personal account. He went out and bought $26 million. Well, you know what? The market started rallying when that was announced and never looked back. Didn't go back down for 2 years, almost 3 years. Well, 2 years anyway. 2 years. And this time around, we have a similar situation. Stock market's down 15%. People are worried. Jamie Dimon, what are you going to do? You're going to buy 25 million more stock? No. He comes out and says, we got a hurricane coming. You better batten down the hatches. I mean, is there anybody more inside than Jamie Dimon? He's an incredibly smart guy. He sees what's coming. He can't flat out get too, but that's about as bearish as he can get because sometimes it becomes a self-fulfilling prophecy if you got too bearish. So when these smart guys are telling you these things, you know that we've got some more serious issues to deal with. Now, the one thing I do want to say though, and if you trade a lot, if you come on this chat room and you trade a lot or trade very little, it makes no difference to me. I put my trades out there. You decide whether to take them or not take them. Decide what maybe some other people in the chat room are doing. I do not make any money if you trade a lot or a little. I mean, some people, you worry about brokers, they'll churn them and burn them, as they used to say. Watch the Wolf of Wall Street. Let's just get these guys in. Let's get the commission and just get them in. But then nowadays, of course, you have zero commission, but you get paid for assets under management. So I got more assets under management. I'll make more money. Okay, you come in, you join up for a member of the chat room, and you're going to pay again. If we raise the price and we continue to have the success we've been having, we decide to raise the price 6 months from now, doesn't matter. When you all go for the re-up, you're going to get the same price. Okay, the new people will have to pay more. You'll get the same price. Okay, you pay one time, and a lot of these people have been able to do made up the fee very, very quickly. And so again, you're not. I've said before, it's like you go out and you go to a really nice golf course. It's a public course, but it's a beautiful. You go Pebble Beach. I think it costs $500 or something. It might be more to play around the golf there. And you go, I'm going to pay $500. I'm going to love it. And then when I'm done, I'll just have the experience, but the money's gone. For here, it's like, no, hopefully you'll love the experience, but not only will the money not be gone, you will have made more money than the money you put in. So that's
really quick. I want to give a shout out here. Crystal Disa. Welcome to the family, Crystal.
Thanks for joining up. Thanks for joining up, Crystal. And we'll see you on the thing tomorrow, which we're looking forward to. And again, of course, we have that employment number tomorrow. We'll see what happens. Sometimes the employment number is kind of a benign one, and it doesn't really move the markets. But in today's volatile markets, I'd be surprised if it didn't move it one way or the other. My feeling is probably going to be to the downside, but we'll know that soon. We'll know that at 8:30 tomorrow morning. But again, the point is we're just trying to help people. I don't. You see all my trades. If you trade a lot, you trade a little. It doesn't. I don't make any more, any less. It just doesn't make any difference to me. I'm not a churn them and burn them. We're not the Wolf of Wall Street. We're trying to. If I lose money on a trade, if you lose money on a trade, I lose money on a trade. Okay, I would both make the same amount. I mean, again, if you hold it longer, you can make more, or make less, or whatever. But that's just. But at least you have an opportunity to look and to find out why we're doing things, and that's it's an educational aspect of it as well.
And yeah, and someone, and so basically, good question here, JHM Cohen. So basically, am I correct saying that you can just piggyback the trades in real time? That's exactly the point. You hit it on the head. You're literally absorbing Matt's 40 years of experience in Wall Street and his trades so that you can take the trades that he's taking. These are Matt's trades. You are taking Matt's trades. So
Right.
he's been doing this for 40 years. Basically, you're just piggyback riding on his 40 years of experience. Yeah, you're 100% right.
Now, it's funny, as I said, I've done all my trades. Now, people say, well, what about your long-term trades? I mean, you haven't put one long-term trade. I make picks and stuff with my stock picks newsletter, but those are kind of long-term trades. But the ones where from my own account, and I'm like, well, I've been mostly in cash all year, so that's why I haven't seen those. I haven't lost any money in my longs because, well, I've lost money in Citigroup, but I've owned that stock for 20 some odd years, and it's a very small position. I inherited it when I worked at Salomon Brothers, which got taken over by Travelers, which got taken over by Citigroup. But anyway, but the point is that this year, we're way up. I mean, way up, and the vast majority of my big account, long-term account, is in cash, and the trading account is up several $100%. And we're just trying to. Again, we're trying to more than just weather the storm. And that's great when you weather the storm. But you know something? There's a lot of hedge funds over the years have been able to really profit from the storms. And now that we have the tools, I want to do, I'm going to help people do the same thing, and individuals do the same thing. And we kind of feel at the mercy of the markets. But if we're in there, I mean, we have the time and interest of being active traders, we can take advantage of it. And so far, again, I've showed you a bunch of examples. I could show more going all the way back into the last year. I haven't even been doing this for a full year yet. Although again, I've been doing a bunch of stock picking. And just to give you an idea too, just real quickly, about my background is that we usually do this at the beginning, but I forgot to mention. I spent 25 years as a trader in the business, an institutional trader, talking to, again, I worked for Salomon Brothers for 15 years and Merrill Lynch for almost 10. So it was about 25 years. And then when I moved to Miller Tabak as the strategist, I also continued to do trading there. Now most of my trading is my own, but or all my trading, I guess, is my own. And others people do the trading at Miller Tabak. It had nothing to do with me. But I'm still. But the point is, I know what not just what should happen, what should theoretically happen. That's what most economists and most strategists look at. I look at what's really happening. I mean, 25 years, I covered the Fidelity, the biggest mutual fund in the world, BlackRock, the biggest hedge fund in the world, major insurance companies, major banks, these other institutional money managers, and I worked, covering their trading desks. And, so we really learned what all these other aspects of the market that are so important in active trading. And I'm not just looking at the long-term, believe me, the long-term fundamentals are very important, but I want to look at the short-term issues that really move markets and move individual stocks as well. And I'm able to pull that together where, again, you listen to most of these strategists and some of them who have been wildly bullish all year long, and they keep saying bullish, bullish, bullish. And I don't know how whatever, they've just been dead wrong. And it's just been something that's been able to help me come from a much different, much more unique background to really look about what is going to happen, not what should theoretically happen. And so that's really my background. And it's like I said, 25 years. It's just different than most people that you hear. And I don't know if you've seen me. I was on Bloomberg this morning. It was actually Bloomberg TV out of London. So I don't know if anybody overseas accounts might have seen me. I was on this morning about 5:30 Eastern time, which had been about late morning there in London and here in most of Europe. I was on Bloomberg Radio the day before that. I was on CNBC Asia earlier. Next week I'll be on Bloomberg TV. I'm sorry, I'll be on CBC Tuesday morning at 5 and Bloomberg TV on Thursday at 2. So you can see that there's a lot of institutional players and financial people who, one of my Bloomberg interviews, I got a call and it was the executive assistant of Carl Icahn. He wanted to talk to me. I thought it was a practical joke. And well, sure enough, 10 minutes later, I was talking to Carl Icahn and his son for an hour. Because this was last fall because he understood that I saw what was going on, and I saw that what was coming. I mean, I had been turned bearish 3 weeks ago. I was talking about this at the end of last year, saying you got to raise cash, you got to get defensive. And there are very few people on Wall Street who were saying that at the time. They're all saying it was obvious now, but it wasn't quite so obvious.
Man, with your performance, Matt, you got all these hedge funds drooling over you, man. Like you got Tiger Global, the ninth biggest fund that cut in half, and you're here throwing. I mean, and just to clarify, guys, like the portfolio that's up several 100%, that is the chat room portfolio, right. And Matt's not going all in on these trades. He's put in small positions and still able to grow his portfolio like that. So you don't have to be risky to make those.
No, games. I mean, we try. I mean, that's the point, because that's why people say, "Oh, what are you going to do with that position?" And again, maybe I should be a little bit more specific. But I come in, I say, this is going to be a very small position for me, and then all of a sudden, it drops 50%, and I'll be like, "What are you going to do with that?" And I'll be like, nothing. Maybe it'll bounce back, maybe it won't. I don't really care, because it's such a tiny position. It's not going to make any difference to me. But that's the whole point. Okay, here's one I really like. I'm adding to it. Okay. And I say, hey, now it's a medium position. Now it's a big position. And so suddenly because you're not going to bat 1,000. You're not going to get everyone right. No way. I mean, the only one that's going to be perfect this spring and summer are going to be the Celtics when they sweep the thing starting tonight. But and seriously though, but you're going to have losers, and the key is that keep the losses small, keep the trades small. It's like, okay, I went in yesterday in a negative bet on the XLE, the very, very small. It dipped, then went back up, then it's dipping again, and then so what I did when it dipped again, I had a loss, but I still had again, it wasn't a big trade anyway. And I said, I really feel confident that oil on a short-term basis, it's only a short-term trade, is probably going to go lower. These oil stocks go lower. So I rolled it out to next Friday. And then I could say, okay, I can just sit and watch that. And once I see that it's really starting to work, then I'll add to it. Then suddenly I'll make a tiny position that I don't really, at some point I'll if it's not really working early next week, I'll just take the loss and move on. But it's such a small thing, I'm not worried about it. So if you're losing a couple of $100 here, or for other people that might be $50. For other people that might be thousands of dollars. I don't know. That some people have so much money that even thousands of dollars don't mean anything to them. But you say, okay, well, I lost a couple of dollars there. But the ones that turn up, it's like, okay, I've got a small position. All of a sudden I built it up, and yep, I had 4 trades that lost money, and I had 8 trades that made money. Okay, well, that's a pretty good batting average, but it's still, well, yeah, but I lost $200 on those 4 trades, and I made 10,000 on the winners. So that's what we're trying to do. We talk about risk management, is making sure that the big ones are the ones that really become big trades. And sometimes, every once in a while, we'll really feel like that FXI. I was like, this thing is so ridiculously oversold. We're going to make this play right now. But frequently, I just say, I'll dip my toe in. We'll buy a little bit there. I get more confident. I'll buy a little bit more. This isn't working. I'm just going to get out. There was one where it went up and down about 10%. It went up or down 3 or 4 times, 10%. I was up 10%, down 10%, up 20%, down 20% in like an hour and a half. And I said, this is crazy. I'm getting out. and I got out flat, and that was fine. Okay, move on.
I gotta say, we have a lot of fun in the chat room. Let's be honest here. We make money. We talk about trades and stuff like that, but ultimately,
we talk about important things like the Celtics. I mean, that's
Yeah, well, here's the thing, man. Like, because I really like your approach, because not only do you explain why you're making the trades, you explain the macro. And look, right now it's all about the macro. It's all about the macro. So you explain it to the point where it's like, because I remember, Matt, like a year ago, we were doing these things when we started the chat room, and you and I were talking about yields and things like that, and like all these rates. And I remember that, some traders that were new, they were like, who cares about rates? I don't understand that. I just want to trade. Give me the trade idea, and it kind of it just reminds me so much that, like, sometimes when you're a trader, you have to find a community, you have to trade with a mentor, because otherwise you're just going to go out there and nothing matters, right? You buy it, it goes up, and that's all there is to it. But now that's why so many retail traders got wiped out of the market, because they weren't able to do risk management, and they weren't able to understand the markets, right? Stocks don't just go up all the time.
Right. And it's so true. I mean, it's And I could never do a trade if I didn't have, well, I'll take it back. Yeah, if I didn't have a good, I could never do a trade if I didn't have a good solid reason. Every once in a while, that reason may not make a whole lot of sense, and I'll tell you one reason why, but in a second. But let's just say, well, because Matt Maley said it was a great trade. Well, I want to know why. Why does he think it's a good trade? I mean, maybe I disagree with him, but geez, he's been hot lately, so or he's been, I've been hot. We've had a great year. He seems to know what he's doing. I'm going to go ahead and follow him into this trade. Great, but I still want to know why. I mean, and number one, number two, it's how you learn. I mean, if you're just being spoon-fed stuff, someday you get, well, that's the problem. If you're just being spoon-fed stuff, and then I got winner, 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 winner. Oh my gosh, this guy can't lose. I'm going to put all my money into the next trade, and that's the one loser. And then all of a sudden you're but if you know why, you sit there and say, okay, Matt, you've been really good, but I just don't agree with that one. And that's what happened to me. I've walked away from ones that people said I want to do this, and I've said, well, I don't like it, and that's why. And I've been very good in avoiding that trade. But like I said earlier, I've missed a few that, boy, I made just people just knocked it out of the park. Shopify, and as I mentioned, Amazon, et cetera. I've missed some, and I'm so glad that there's people able to do it. But I give and sometimes I agree with them, but for whatever reason, I don't. I just don't want to make that trade. But the point is, we're trying to make sense of the thing, not just trying. If you don't know why you're doing it, it just doesn't. I just don't think.
There's a very good saying in deal making where it's like, if you're the person that knows the least about the deal and the table, don't do the freaking deal. Right.
Yeah.
Same thing with the trade. If you don't know why you're doing it and you're just kind of going by emotions, and look, there's two sides of the trades, Matt, right? There's one trader buying, there's one selling, and vice versa. Right. One of them is right. One of them is wrong. Right. So that's why we want our members. Ultimately, we're trading against other traders. That's the reality of it. We're trading against other people because we're buying the stuff they're selling and vice versa, or with markets. But, that's what I've noticed, because you have such a great community there, because the trades that these guys are doing, it's like I'm literally telling them, like, hey, you have to start sending me an alert, email me when you guys get into these trades, these earnings trades. That just it's just great to see that happening, because look, there's layoffs happening. There's people that are having a rough time with the economy, with gas prices, with food prices, and this is a place where you actually empower people, like, to improve their financial situation, and that's something that. No. I mean, things are pretty bad. So,
And the thing too is, I hope people think about the world, but the markets differently. I mean, when I started to say there was a reason where I made a negative call on Microsoft, and the only reason it had great company, great prospects, great management team. The only reason why I turned negative on the stock was because the CEO sold 2/3 of his holdings last Thanksgiving. It's the only thing. I had no other reason. And they're like going, what, are you crazy to stop? And I go, nobody sells $270 million, $274 million of stock at a high, unless he thinks it's going down and going to stay down. Okay. That doesn't mean it's going to go down, but I mean, for a couple of years. Okay. Maybe it's only 18 months, but for a while, 18 months, 2 years, 3 years, doesn't mean it's going to go down that whole time. I'm not saying that at all, but he knows it's not going to get back to that level for a couple of years. It never happens. Insiders do never sell that kind of size unless it was nothing unethical about it. He didn't juice the stock up by lying about their results. Everything was above board. He turned the company back around. It was one of the great companies in the world. It had a big dip for a decade. He came in a decade ago, brought it right back. Unbelievable job. He deserves every penny he's made. But he sold all that stock. Why? Because I believed it, and I said at the time, right? I said, this guy, he sold half of his stock right before Thanksgiving, and a week later, when it went back up to that price, kind of a double top, he sold the rest. I'm sorry, he didn't sell the rest. He still holds some. I mean, don't get me wrong. And he's going to get more when he gets paid this year. Okay, it'll be part of his bonus. But it came, it got right up here, right to Thanksgiving, came right back there, and he sold the other 100 million. So $374 million worth of stock. He has saved almost $100 million. If he had waited to here, be $100 million less, okay? And they say, okay, well, insiders sell all the time. Yeah, sure. You want to buy a house, in Hawaii, you want to buy a house on the Riviera and you want to sell $10 million or $20 million of the stock, that's fine. But when you sell 2/3 of your holding, you are saying my stock's too high and I need to get out. And again, if 3 weeks later he announced that there was an accounting scandal going on, he would have gone to jail. It's not the case. He is unbelievably good CEO, a fabulous CEO. But again, I don't want to.
Right.
People have been on these things before. I'm telling you, when insiders sell, and the biggest ones is what happens when companies go public. Not any old company. If a company just goes public because they want to raise money because they want to expand, that's fine. They've been public for 3 or 4 years. I'm sorry, they've been a company for 3 or 4 years and they want to go public. That's fine. You get a company's been a private company for 20, 30, 40 years or more, and then suddenly they want to do an IPO. Big question marks should be going. Big lights should be going up. And wait a minute, what the hell are they doing? Goldman Sachs, all those partners, those insiders, they sold. They took the company private in 1999. What happened in 2000? The market went down. They saw the bubble. They got out. Blackstone, one of the best private equity firms in the world. Summer of 2007, they went public. The partners sold to the public. What happened 3 months later? Great financial crisis.
What about Coinbase?
What's that?
Coinbase. Remember Coinbase?
Coinbase. I mean, it's just oh my God, Coinbase. And how about Peloton? Oh my God, these guys their company's going into the ground. They've got hundreds of millions of dollars. Again, it wasn't, they didn't do things that were as unethical, but I mean, it was a little different there. But anyway, the point is when insiders sell, and you say, well, wait a minute, whoa. Microsoft had been a private company for a while, and then when they went public, well, the stock just kept going straight to the moon for 20 more years before the dot-com bubble crashed. And I'm like, yeah, but the insiders didn't sell. It was Bill Gates only sold $1 million worth of stock. He kept all that stock for decades. That's why he's the rich, or he used to be the richest man in the world, still one of the richest men in the world, because he held on to all that stock. And he literally joked and said, I want to buy. The only reason why I'm selling is I want to move out of my mother's garage. He sold $1 million. He could have sold whatever, 50, 70, how many hundreds of millions of dollars, a couple $100 million. He sold $1 million just to have some spending money. The rest he kept into the company. The only people who sold were the venture capital guys that had seeded the money at the very beginning of when he started the company. Those are the ones who sell. So be careful. So just because somebody goes public doesn't mean that oh my God, the world's coming to an end, or the stock's about to fall a bit. Sometimes they're just our investors want to sell, or we want to expand our business, so we want to go public. There's a lot of good reasons, very legitimate reasons why companies go public. But when the ones that go public after they've run up a huge amount, be very careful. Be very, very careful.
Yeah, and we were talking about I don't know if you can pull up the chart on Mullen. It looks like it's up 12% after hours. I want to let you guys know we have an interview with the CEO of Mullen Technologies tomorrow at 11:30 a.m. I don't know if you want to pop in there, Matt. It's going to be on YouTube. I definitely want to see what this guy has to say. The fact that he's proven and it's been independently tested that those batteries go 600 miles, 2 separate independent where they tested it, it's starting to look a little bit more solid for them. I don't know what the CEO is going to talk about tomorrow, to be honest. I'm just seeing the stock ripping after hours, so I don't know. And we could do maybe a little bit of a little technical kind of thing, Matt, so we can show the folks a little bit.
Just because my Bloomberg is not giving me an after an hour chart, which it usually sometimes it doesn't do. I'm not really sure why, but hold on a second here. We can just look it up on my. See, look at this. It's up 11%. Okay, up 11%. Boy, those options are going to be exploding. But it's up 11% in after hours trading, at least as of 6/18. So yeah, that's up to date. So yeah, this one's going to be. Now let me go back to my hold on, my Bloomberg page so we can look at that. So I mean, here it is. Now, what we've been talking about with this thing lately. Again, I want to get some of these lines off because it's just sometimes it just gets too busy, too many lines. It gets too complicated. But okay, the stock. See what happened here? The stock got up to its 50-day moving average, and that's the yellow line there. It just couldn't break out. But now it obviously is going to with this news. Okay, that's going to give it a lot of upside momentum. This is actually better that they announce this news now rather than last week, because when you get real positive news after the let's zoom in here. Again, it's only a $1 stock, but look at this. You say, Okay, this got a great move. Obviously, some people saw this coming. That probably some insight. Let's see. Stock was up 63%. Okay, before today. If they broke the news yesterday and the stock is up 63%, okay, it's certainly going to rally more, but it takes some of the gas out of it. It just takes away some of the upside potential. Well, yeah, guess what? It was up 63%, but then today it fell 28%. Okay, now it's going to run back up. The fact that it's no longer up, it's instead of being up 63%, it's going to be up 20%, not even 20%, et cetera. Again, can it go back to these highs that we saw during the meme stock thing? Maybe not, but anytime soon. But believe me, if they come up with the battery, as we talked about, somebody's going to come up with a battery, okay? And the one who does is going to make a fortune. It's going to be an unbelievable company. So this is one not just to look at the options, but also to look at as a long-term trade. And again, it's at $1 even tomorrow. The stock opens at whatever 170, under $2. It's still a pretty inexpensive stock. And and again, you listen to what the CEO has to say tomorrow at 11:30. It's one, and there's nothing better than being able to buy. These penny stocks that trade for 30 cents. Okay, I don't know. These guys are a legitimate company. Whether doesn't mean they might fail eventually, but it sounds like with this new news they're really going to do well. But the point is, when you buy this stock, you can buy many shares of it because it's a $2 stock. If you're buying a Tesla, it's a $700 or $800 stock. Okay, you can buy fewer shares. Well, what is that? Why would I care? What's the difference? As long as it goes up, what do I care? And the reason why that's important is if you can only buy a couple of shares of a stock that's a $2,000 stock versus a $2 stock, it's like, okay, now all of a sudden it runs, it doubles in price. What are you going to do? Well, geez, I own 4 shares. Maybe I'll sell 2. Well, you can, if you own, you own a stock where you own hundreds of shares because it's such an inexpensive stock, then you say, something, I own 400 shares, I'm going to sell 100. And I still got a nice 300 shares, and I'm going to feel good about it. I'm going to go for a vacation or buy a new car or put addition in my house, whatever it happens to be. But I still have it. But if you only own a couple of shares, it's kind of, it's either you buy them all or sell them all. Whereas when you get these kind of situations, and of course, the fact of the matter is that they're options. When you want to play in their options, it's a lot cheaper to buy. When you're buying, that's one of the reasons why Amazon after tomorrow, I think it splits after the close. Well, maybe it's before the, but anyway, when the stock comes down, those, instead of, look at this right now, Amazon. Hold on. See how expensive it is to buy. I mean, you always have to, when you buy a stock for 50 cents, that really costs you $50, okay? 50, because you have to 2 zeros, okay? But still, it's 50 cents is still a good price. Look at this, 50 cents. Yeah, how about buying them for one option for $19, okay? So you're not paying $19, you're paying, $1,900, okay? That's, for one option. That's expensive. So when the stock splits, you're going to be able to play in this thing way easier. So that's just another aspect of it. Again, we try to be educational and help people think about what they're going to do. What they're doing and why they're going to do it. And like I said, I really think that this volatility is going to continue with us. And when you get guys, Jamie Dimon, et cetera, making these kind of concerns. I mean, and I mentioned, I mentioned Carl Icahn. I mean, here's a guy that said, yeah, I expect a recession or worse. He said that about 4 or 5 months ago. So, there's some big smart guys, very guys who have been consistently successful for decades, who are saying some pretty dire warnings. You got to pay attention.
I want to give a quick shout out, Orozco JM. Welcome to the family, Mr. Orozco.
Thanks for joining. Great to be here. I just want to, and I just want to say, because I was looking at my notes, because I take down notes all day long. I ran to old fashioned. I keep a notebook and stuff. But I mentioned Jamie Dimon, the CEO of the Carlyle Group. Okay, one of the biggest private equity firms. The liquidity-driven trade that has pushed asset values higher over the past decade is over. Okay, the whole momentum trade is gone. These are direct quotes. We are back to fundamentals. Now, this is great. And he said, this is great. The problem is that means that deleveraging is going to come down, and we're going back to fundamental trading. It's going to take us a while to get there. This volatility is going to last for another year or so. And then you can just go back to that, again, the fundamental trading will be more important. But the point is, it's not just coming out of the stock market. You're not going to get those private equity funds aren't going to have as much money because that liquidity is not sloshing around all over the place. You're going to have fewer startups. They just are. And a lot more startups aren't going to survive.
Speaking of that, about things not surviving, let's talk about that hedge fund, Tiger Global. Are they going to survive? Can you just tell us what's going on? Because you're like, you're in the industry. Can you explain to us what happened?
The thing with them is that the one thing we have to remember is very important is that if they close their doors, that's a big difference between closing their doors and being forced to liquidate. And closing their doors just says, we're just not doing very well, and we've lost our touch, whatever. Sometimes they say that. And sometimes it's just that they know that they've lost so much money. They don't start making their big their big fees unless they get back above their high water mark. So at the end of the year, if they're down 50%, they don't start at zero again. Like it's like, oh, you're up 25% this year. Yeah, but you're still 25% below your high water mark. So you're not getting any management. You're getting management fees. You usually get like a 2% management fee. But that most of them get 2% well, it's changed now, but the old days was 2% management fees and 20% of the gains. So you kept 20% of the profits, but you only get 20% of above your high water mark. So if you're down 50% this year, up up a little bit next year, you're not getting anything in terms of, you got to go back to the old high. Then you start splitting and getting those profits. So they said, I'm down 50%. It's going to take me too long to make that back. I'm just going to close my doors. That's not that's negative, but it's not. It's very negative. Don't get me wrong, especially smart people like Tiger. They're great money managers over the years. But that they're able to say, okay, we're going to return your money. We're closing our doors, and they'll take several months to unwind their positions. That's fine. When you get the liquidation, like we saw with long-term capital management back in the late 1990s, and it's happened to other people, then they have to sell, and they have to sell now. That's when you really get scary. So when I'm worried about with Tiger, that is concerned, but they're my guess is that they're not so leveraged that they will be forced to liquidate. Right. They'll simply close their doors. But the thing is, when people close their doors, you ever think, well, where does that money go? I was like, well, the money's gone. Okay, yeah, you lost 50%. Well, some endowment, great, we gave you $100 million. Well, yeah, great. Well, we got 50 million back. Oh, okay. Well, okay. What are we gonna do with that? I mean, and it's so many people saying, well, these bond guys, they're going to sell their bonds and buy stocks. You know how much more leveraged bond investors are than stock traders? I mean, they can't. At 3%, they're working money for endowments. They need to make 7% return. How do they make 7% return when they're only getting 3% return on their bonds? Okay, because they leverage. And when this unwinding of leverage takes place, when they get that money back, they're not going to take it and put it into stocks because they're going to take it to meet their margin calls. This is why deleveraging is such an important thing. And that's why what the Fed is doing, is they're trying to do it relatively gradually. It may not feel that gradually, but it's not. It happened all at once when the pandemic came along because the whole economy just froze up. The whole global economy. It happened all at once, and they had to come pouring in with this big liquidity program. This time, what they're trying to do is manage it more gradually, and so if the market goes down over a couple of years, and then it gets back down to where it is, it doesn't happen all at once, and that's my reason to think why this is going to take 2 years for it all to unwind. These guys, the head of Carlyle Group, Jamie Dimon, et cetera, they're warning us because they know this is not going to be something where we had in the past where we got knocked down. We got like Rocky, we got knocked down, flat on our backs, got right back up and won the fight. Okay, this is one where it's going to pound and pound and pound and pound and pound, and it's going to stay now, and it's going to take a while for us to get through it. And a lot of people are really going to become disenchanted with the markets when that happens, and that's what happens in bear markets. They finally say, "I'm done. Okay.
Right.
What we're going to do is we're going to say, holy cow, look how cheap this market's become. And I'm feeling great because not only did I not lose money, I made money during the decline. And now we're going to put the money back into the market, and we're going to be like buying tech stocks in 2003, or buying pretty much any stock in 2009, or 1933, what year you want to pick, when everybody's throwing the baby out with the bathwater, or the stock market's dirt cheap, and you sit there and suddenly you sit there and say, you know something, I'm going to be able to retire 10 years earlier than I thought I was.
Mhm.
That's what
Let-
this is opportunity of a lifetime, and it doesn't happen very often. And
okay.
that's what we're looking for right now.
All right, and all that stuff is just great when you break it down, man, because it just simplifies a lot of things that are happening in the markets. Matt, let me ask you something. Do you think that crashes or corrections are built into the system?
How do you mean? I'm not.
So
What do you
let's
mean?
say like our corrections. I mean, they're normal, right? Corrections, crashes, are they? Because it's like the same story with these growth stocks. It's always the growth stocks. Like it's
Yeah.
always those stocks. So it's like, is it always? It seems like it's been those stocks that caused the big ones. I don't know. What?
Oh yeah. I mean, it's just a cycle. Absolutely. I mean, it's normal. It's painful. That's the problem. It's painful. But for those who see it coming and play it right, um, it's very profitable. I mean, Warren Buffett became a billionaire during times like these. That's what he does. When there's blood in the streets and nobody else is willing to buy, he's the one buying. Okay, he did it in 2000. I mean, he did it with Goldman. Oh my gosh, Goldman Sachs in 2008, and he floated a 10-year. He got a 10-year convert. Let's see here. So you got a convertible bond. Okay, paid 10%. Okay, yields are almost at zero, right? He's getting a 10% coupon on was that actually a convertible preferred, but 10% every year from Goldman Sachs. Okay, this is not some junk bond thing. Okay, Goldman Sachs. So, but it's convertible into stock, right? Well, when he look at this, okay, of course, here we are. I'm sorry, I went back too far. But look what so it's convertible into common stock. So when he sold it at the end, when the thing went, here it is. Oh, thank you very much. You got a 458% gain, capital gain, plus 10% every year. I mean, that's what you do when this happens. This is what we're in the middle of, is this right here. Okay. I don't think I don't want to overstate it. This is a much bigger percentage drop. This is going to come down more, in my opinion. I think we'll easily get below 250 on the S&P. That's Goldman Sachs. I'm sorry, I meant the S&P 500. But the point is, I don't think it'll be down 50% or 80% like the Nasdaq was in 2000. But when you can't go from massive, this is basically, we've been on steroids for 10 years, and especially the last 2. You can't go off steroids without getting weaker.
How did Wall Street miss it? Like, how did Wall Street miss this correction, if you will, or crash, whatever?
Because they're paid to be bullish. I mean, most of them are paid to be bullish. That's just what it is. I mean, I'm sorry, but that's, it's, again, I can't blame them, I suppose. I mean, if you work at Toyota and you know that Porsche has better cars, you're still going to sell the Toyotas, all right? And I mean, I've said this to you in the past, Rodrigo. One time I talked to a company who was interested in hiring me as a strategist, and when we had the initial, just a phone interview just to get started, and he said, "No, well, you're not really a strategist so much as you always have to come up with reasons to tell investors why to stay with the stock market." And I'm like, what? And it's like, well, because we know the market goes up over time, which is true. I mean, and so they want to just ride it out, but we're afraid that people will leave. We want to convince them to keep their money with us, and not leave. And this is one of the biggest money managers in the world. And I was like, well, I want to tell people what's going on, not just because they're bearish, not just because they're bullish. And even now, you hear these people say, they were bullish all the way through, and now they're saying, "Well, I'm a little bit more cautious now." I mean, because they have to keep credibility. They've got to say it. But and of course, some are still going to fall. They're going to go down with the ship. But everything's in hindsight. It just seemed to me, when you have somebody who's on as much steroids as we were on, to go completely off those steroids and go the other direction. We didn't go from the biggest accommodative policy ever to neutral. We went from the biggest accommodative policy ever to tighten. Okay. And you can't have a stock market that's the second most overvalued of all time not go down. It just has to. It just had to. And now the economy is going to be weakening. Like I said, GDP, economic growth estimates have been cut in half, and earnings estimates haven't moved. And you still have people on TV saying, "Oh, the earnings are going to hold up just fine." It's like, you don't have to be a rocket scientist. It's just kind of common sense. You can't have GDP growth get cut in half in a market that's wildly overvalued, and not have earnings come down. It doesn't make any sense. You can say sometimes, if the market was cheap, sometimes that's what happens. The market is not overly expensive, and the Fed kind of tightens up, and then the market, it has a tough time for a while, but doesn't have to get clobbered because it's still fairly valued, and there's no leverage in the market, so nobody has to de-lever. Nobody has to, nobody gets margin calls. Nobody has forced selling. That's what's happened with Bitcoin. Bitcoin, I believe, is a long-term. Well, Bitcoin and cryptos in general. Some cryptos will do very, very, very well over time. Many will fall by the wayside, but some will. And but it got pushed way too far ahead of itself due to the Fed's Fed and other central banks major, massive liquidity programs that started in March of 2020 that had to be injected because the system was freezing up. And people don't. I mean, we didn't have banks about to fail, but the system was freezing up just like it was in 2008. And they had to do something, and they did the right thing. They just kept it on too long, and that's okay. So now that we have to go through this painful period, and that's okay. It's normal, it's healthy, but let's take advantage of it. Let's not just weather it. And then on the other side, we're going to have the confidence to be doing what Warren Buffett's been doing for 70, 80, 90 years, and backing up the truck when the market's flat.
Which one do you think, Matt, is the lesser of the two evils? Right, not saying they're evil, but the lesser evil, right? Higher rates or lower rates?
Well, you have to have. You can't cut rates. You cannot do, and the Fed knew this, and they know this. That they cannot just say to go, we're going to pivot immediately and cut interest rates and go like they did in 2018, because we have inflation. Okay, but not only that, you're going to take the only way if they cut rates and the market takes off and inflation takes off. Okay, you're going to get a huge bubble in the market. Number one. And number two, nobody's going to be able to afford anything because inflation will be so high. Okay, so the lesser of two evils is keeping rates high, continue to raise them, have them tighten them, basically to do what Paul Volcker did in the night. Paul Volcker caused 2 recessions. Everybody hated him back then. Short time after, and ever since, he's been seen as one of the greatest, maybe the greatest Fed chairman ever. And 2 recessions, okay? And he caused them. He said, I know I'm going to cause them. I don't care. We're moving on. And that's what the Fed is doing right now. Anybody who thinks otherwise is out of their minds. However, I do need to say, if the market starts to freeze up again, they'll have no choice but to pivot. But right now, we're not seeing anything like that. And right now, they're saying, they keep telling us, the Fed put does not exist, okay? We are going to keep tightening as long as the system is running fine. In 2018, this is the key thing. Every single bottom of the last decade or since the last dozen years has only taken place because of some major change in policy, okay? In 2018, that's when the Fed pivoted. Well, they didn't pivot. Everybody thought, they pivoted because the stock market went down. It had nothing to do with it. The market was down 13%, 14%, and they tightened again. And it wasn't until a couple weeks later, this is in December of 2018, they tightened. They knew the market was going down further. It wasn't until the high yield market and some areas of the fixed income market started to freeze up. That's when they had to pivot. They didn't care about the stock market. They cared about the fixed income market because that's what the internals of we need the fixed income market for the internals of the financial system. Same thing happened in 2020. We had to have a change in policy. The market was going straight down in March 2020, and the Fed came in with a massive, massive liquidity program, this QE program. That's what saved us. So big change in policy there. 2011, people forget we had a 19% correction then. European markets were down even more. What happened then? The EU, the ECB and European Union came in and bailed out Greece. They didn't really bail out Greece. People say, well, why did they have to bail out Greece? They really didn't bail out Greece. They bailed out the European banks because the European banks were loaded to the gills with Greek debt. And they would have all been the European bank would have been in big trouble. And so again, change in policy, that's what happened. In 2009, the Fed was flooding the system with liquidity. Didn't matter. The market was still getting clobbered. What happened then? That finally the authorities in Washington, D.C. decided to change the rule where the banks had to mark to market every single night. So they no longer had to keep selling assets to keep their books in line with the regulators. And literally it bottomed right at that day, okay, when they changed that rule and the market looked up. We are going to have to see a change in policy before that happens. And then right now, from everything we hear, we've had a lot of Fed speak this week. That's not happening anytime soon. This market's, it's going to have these bear market rallies just like we had in March. We actually had one in February as well. We're having one right now. It may end tomorrow morning. It may be another week or two, but we're seeing another big painful decline is coming. It's just what happens. Why the rest of Wall Street? To answer your question, I'm rambling on here. I didn't mean to, but to answer your question, they're paid to be bullish. That's what they do. The big brokerage firms are trying to keep the money under management there. They want to keep the business with their customers, and the big brokerage firms, the big money managers want to do the same thing. And that's, you will never hear a Wall Street, well, almost never hear a Wall Street economist say we're headed for a recession. We're going to go into recession until after the recession. After we're already in it, or after it's already over. It's a career killer. You can't tell your CEO will come and say, what the hell are you doing? You can't tell people we're having, and the Fed's not going to do it either. They said, do you think we'll fall in a recession? No. But they don't, notice they're now no longer saying we're not going to have a soft landing. They've kind of gotten rid of that. Now they're saying, well, one guy, the Philadelphia Fed president, we're not going to we're not so much trying to get a soft landing. We're trying to get a safe landing. It's like, so
yeah, I mean, these guys they've gotten the transitory thing. Yellen, the Yellen lady just admitted she was wrong. Like people weren't telling her all this time. Ultimately, man, I'm not bearish on the US markets. I'm just bearish on just the way they have gone about everything. It just has, yeah. And
this is still the best system in the world. And it is. And like I said, we've said before, it's normal, it's healthy, it's painful, but let's instead of making it painful for us, let's make it something other than painful. Let's make it profitable.
Right.
This is what happens. It's human nature. It's happened for centuries. Okay. It's not, it's sitting around, turning around saying the Fed's and in many ways, the Fed it's like the Fed did what they had to do to save the system. Okay. They did take too long to come out of it, but they're not the one caught. They're all saying it was because they kept that stuff on for too long. That's why inflation's coming. No, yes, that is having an impact on inflation, but the much bigger reason is supply chain issues from the pandemic and the war with Ukraine. Those are the real reasons we're having why inflation's become a big issue, not because of the Fed. People need to stop blaming the Fed. They should have seen it anyway because they told us for months what they were going to do. And that's why I was screaming from the mountaintops in December and January to people that this was going to happen. Is exactly what happened.
Yeah, no, you've been
there, but
no, it's true, man. Look, I'm going to tell you guys something. All right. I've been here for about a year and a half. This guy, Matt, has literally called every single damn correction. And the best part is that he tells all his members it's coming. Go light on stocks because we're going to get some good buying opportunities. And we can also make money on the way down. And I'm telling you, that's a best friend to me. But I want to give a shout out to Santiago. Welcome, my brother. Santiago, welcome to the family. Sorry, we've talked a lot about stuff here in the US. Let's talk about stuff outside. All right. You and I were talking about several months ago. We were talking about the possibility of the China-Taiwan situation getting worse, right? It seems like it's going that way. Where do you see the chip sector? Just give us a touch on that whole situation of geopolitics and trade, markets. And then if we can touch on Ukraine, because I just saw that they raised their interest rates to 25%. I don't know what the rate situation works like when you're in the middle of a war, but that's definitely an interesting thing to hear from you, how that works.
Yeah, this whole, again, it goes, well, two things. We'll start with the first issue is that the thing with China and Taiwan, Kyle Bass, I don't know if you're familiar with him. He's a big hedge fund manager, and he's been very, very critical of China for a long time, but he thinks that they'll invade Taiwan this year, or he says that the chances are high that they'll invade this year. Whew. I'm not calling for that. And again, I don't pretend to be a geopolitical expert, but I do spend a lot of time reading on this stuff, as does he. And he knows more about it than I do. But it's a very, very serious issue. And if you think we're having inflation now, wait till you think it's a chips. 25%, over 25% of the chips supplied to the U.S. come from Taiwan. What happens if there's a war there? Either if they take over Taiwan, then we'll be under we'll depend on China for all those chips. Number one. Number two, if even if it's just a war, they're not going to be able to ship out those chips with it. And chips are everything. You think they're just cars? I mean, they're everything. The price of everything is going to skyrocket. Okay, that's going to be a big, big problem. And that's why Intel and why we're pushing to get Intel to build. They're building a new factory or confab in Ohio, but that's going to take 2 years to build, or a year and a half. No, they've already started, so a year and a half. There are going to be chips coming out of there. The U.S. does not make chips or for any practical purpose. And Intel got out of the business. Now they're back into it, but they're not going to be able to get going for almost 2 years. So this is a major, major problem. And there's, China has flat out said this is a major part of their policy. They're going to be a China one, and they want Taiwan. And you see what's happened with Afghanistan and Joe Biden. This is, if you're thinking about it, it's like if I want to do this in China, if I'm China, I want to do this. I want to do it. I'm not saying anything negative about Joe Biden, but you want to do it when this guy's in there because they see what happened with Afghanistan. Now maybe the back channels they've said no, we're going to be much tougher this time, and hopefully that'll keep it from happening. But that situation is a tough one now. And then we go over to Russia. These sanctions are going to be on for a while. They're not backing off, and even if they get a ceasefire, it's going to be a while before those sanctions go away, and because they're not going to back out of these provinces, something could happen there. I mean, there was what's his name, Mark Fisher, I think his name is, but one of the best traders in the business was on CNBC yesterday saying the best time to buy a natural gas is when they announce a ceasefire. They'll announce a ceasefire, and oil and gas will fall through the floor for 2 or 3 days. And then everybody will realize, something? It doesn't matter because we can't produce any of this stuff anyway, and it's going to go right back up. It's going to be the best buying opportunity of our lifetimes when it comes to energy. So the point is these prices are going to stay high. And it doesn't, people say, oh, those peak inflation, we're going to get used car prices are going to come down, and those CPI numbers are going to come down. It doesnn't matter if the overall CPI matter comes down, if oil's still trading above $100 and wheat's still trading, 70% higher than it was last year. People have put food, they have to heat their homes, put food on the table and fill up their gas tanks. If that costs them a lot more to do that, it doesn't matter where rents go. It doesn't matter where used car prices go. They are going to have less money to spend on everything else. And it's going to be a stagflation. That's where we're already there in stagflation. It's kind of wishful thinking to think otherwise. And I'm telling you, the Fed knows that we're headed for a recession. They just can't say it because it would make it a self-fulfilling prophecy. So they can't say it. Why not? But it's never happened. They ain't going to start now. They will admit it after the recession's already obvious. But
oil, the thing with oil is that it keeps ripping, and it's like, you have, because like I made this trade on this company. It's like a small stock, like a $4 stock, HUSA, Houston Energy something. I was trading it because I saw oil almost hit 120, but none of these companies in the U.S. benefiting, or they're not allowed to. I don't know what the situation is with the U.S. companies here with oil.
Well, the thing about it is that they're making better margins and they're making better earnings. And the thing is, you say, well, what happens? First of all, we can't pump more. Okay, that's the biggest thing. And people say, well, we don't have to worry about Europe because we'll just get in LNG platforms and well, that's fine, but we cannot produce anymore. Why do you think oil was down in the morning because they said that Saudis are going to pump more oil if Russia gets cut off or is cuts out next winter? It's like Saudi doesn't have the capabilities to supply a lot more oil. It's 2 million barrels a day. They don't have that capability. So we can talk about them doing, helping the situation more, and it will help some. Don't get me wrong, but the thought that oil is going to drop back down to $60 or something is really, it could happen. But for that to happen, we're going to need a major recession. We have a major recession. That's not good for the stock market. Okay, and that's the other thing. People talk about the Fed saying, well, don't worry, because the Fed's going to take a breather in September. they're not going to take, they've told us this week, they're not going to take a breather unless the economic conditions get really bad. Well, guess what? Guess what will happen between now and then if the economic conditions get really bad? That's the stock market's going to go a lot lower. So that's not a reason to be bullish right now. It's just convoluted.
I want to give a shout out here. Samuel, Nigel, welcome to the family, brother.
Thank you. Great to have you. Welcome aboard. We'll see you in the morning, obviously, at least the morning here in the U.S. And tomorrow could be a big day. We'll see. We'll just see. There's an outside chance it'll be a kind of a dud number. Nobody really cares, but boy, the odds of that are very low. So tomorrow we should be able to kick things off for you in a very active way. Again, we'll see what happens. But
yeah.
anyway.
No, for sure, man. And that's the thing, like you chop it down with the folks there. So, all right. So you're seeing, well, look, it looks like currently, the administration doesn't like oil, right? But they like green energy, right? And green energy has taken a beating, man. So what are your thoughts on green energy? I'm not talking about Tesla. I'm talking about just the overall like solar power, green energy stuff.
Yeah, I think, this is a great, this is a great, it's funny. I got some people, friends of mine, who really are kind of extreme the other way. They're like that green energy is a complete farce and all this other stuff. And I sit there and say, I go, well, that's fine if you want to believe that. And I'm not as extreme as some people are in terms of we all want to get greener. I mean, there's no downside to being greener. Okay, we want less pollution. Of course we would love just water power or wind power to do everything because it's natural. We won't lose. It keeps coming back. For fossil fuels to go away. But the real point I say to them is like, well, if you're talking about the stock market, I don't care what you think about it being a farce. Right? It's coming. All right. And these companies are going to make money because that is the future of energy. And maybe it's the big mistake that a lot of people made when I turned really bullish in October of 2020 on all these fossil fuel companies, because I said, we cannot go to clean energy in the next decade. It's going to take 2 or 3 decades. So I just saying, we really, this is a great group to buy right now. And we just do not have the capabilities to do it as quickly as we'd like. Okay, so if you ignore these stocks, you're going to miss a great opportunity, and a lot of people did. And even people who've made a lot of money didn't make anywhere near as money as they should have. They got in when we were talking about it in October 2020. Everybody else was talking about it 6 months later after the group had already gone up 60, 70%. But and the same thing with green energy. So you can say it's baloney, but and I don't believe that at all. But if you do believe that, it doesn't matter. You should be looking at these stocks because when they buy, because the ones that survive are going to do very, very, very well. Okay, that's where it's going. Whether you like it or not, that's where it's going. And so take advantage of it. So I guess my point is right now, they've gotten beaten down pretty bad. I think they'll get beaten down even more over time. But the survivors, I don't want to there's going to be plenty of survivors. But the ones that do well are going to be, again, this is one of those situations where maybe it's this time next year, or maybe it's at the end of this year, whenever that big washout comes, or the bottom comes, and for that matter, could happen 2 years from now. I don't know, but that's going to be a sector that you're definitely going to be looking at because it's what it's and you want to will be wanting to avoid the fossil fuel companies who have not made the transition. Many of them have or are starting to make that transition, but it's just one where too many people get caught up in stuff. It's like, and I understand it morally. We don't want to use fossil fuels. That's great, but if you're an investor, you've got to see what reality is. And the reality is, we still, as the IEA said, International Energy Association, in 2030, the demand side, this demand will still be only 5% lower. Demand for fossil fuels in 2030 will be only 5% lower than it was pre-pandemic. Think about that. There'll be more, because there'll be more people, there'll be more demand for energy, but for fossil fuels, it'll still be 95% of what it was pre-pandemic in 2030. Okay, that's 8 years from now. So these companies aren't going away. We do not have the capability to change it. But when we do, it's coming, and it's coming fast. And
right.
We want to take advantage of it.
And M. Rosso, I think I've seen you here in the chat. Good question. Asking about metal. It's so funny. Matt was like bullish on metals for past 3 years when nobody was talking about it. You'll notice it that Matt is typically one of the first to start calling stuff. He's been calling every correction accurately since that I've been here. I've been here for a year and a half. All of them continuously. So, and even when Nadell sold those shares on Microsoft, I remember the exact day when we did that session. And man, it's crazy, but that was the day where it just all started going downhill, man.
Right.
As soon as
the NASDAQ topped right then, and it just hadn't turned back.
Yeah, and that's the thing. Like, you're not predicting the future, but man, you've been doing this for 40 years. Like, you can't just buy that sort of experience. You have to live through it.
And here's the NASDAQ index. It's just a basic price, nothing special, no RSIs, no anything, just the basic. So that down here is the volume. Okay, guess what? There we are. There's Thanksgiving right there. Okay, that's when Nadella sold that Microsoft. Look what it's done since then. This is the NASDAQ. Okay, it was. I mean, what more can you say? It was just, he nailed it. He knew. Smart guys knew. And again, I tried again. Same thing with you talk about the XLE, which I'm a little worried about near term. Hold on a second here. But people were telling me I was absolutely out of my mind. I was like, look at the fundamentals, look at the real world, forget about it's like the fossil fuels, all these companies are going to be dead, they're all going, they're going to be dinosaurs. And I'm like, yes, they are going to be 25 years from now. But this is when, okay, so we got the low and pandemic low right here, right in here. That's when I start pounding the table. Let's go bullish, okay? That's the XLE energy ETF. And this is the XOP, which is the oil and gas ETF, which I also turned very bullish on at the same time. I was in the same note. Okay. Let's just go here. 2020. And again, so it was the fall of 2020, right in here. I actually started here, it ran a little bit, came back and retested the low. So I was a little early, but I didn't go a lot lower. I just it barely went lower at all. It ran a little bit and then went back down, retested the lower, actually went slightly below. But this is the XOP is done. Okay, the XOP, bang. 302%. Forget about any options, okay? Everybody else, I mean, okay, you say, well, the other guys, I mean, Goldman Sachs came in here, Morgan Stanley came in there, okay? They got in at the beginning of the year, okay? The beginning of next year, I said, well, they got in pretty early too, okay? Even if I'm generous and say they got in February, it was actually January, okay? Great. Okay, they're up 146%. Wow, 146% is great. That's half because we got the bottom. This looks like, oh, they barely missed it at all. They actually missed half the move. Half the move if you're not early. That's what the whole thing. And Schwab and the Bank of Bank of America, Bank of Montreal, BOM, they got in March. And again, they're patting themselves on the back being so smart because since they turned bullish on this group, they're up 77%. Okay, 302% is a little bit better than 77%. It's again, believe me, I've been wrong. I've been wrong plenty of times. The trades that haven't worked, etc. I've got too bullish too soon on certain things. I've got too bearish too soon, too late. I don't pretend to have all the answers, but I do have a list of institutional brokers of institutional customers who read my, pay for our research every single day, and it's read it every day, and I'm just glad I have the opportunity to kind of provide it to the individuals that I haven't been able to do in the past, and it's again, all this stuff is people can claim that they made this call. It is all in writing. The Maley report that I do, or the stuff that I put out for Miller Tabak, it's all in there. I'm not making up anything.
And for folks to kind of understand really the caliber of what you do, you're a global market strategist for Miller Tabak, and you guys have institutional clients that basically pay you so that you tell them what you think. So right. Funny that we have retail traders that get they get Matt Maley still. And honestly, man, like I remember, man, when I first got here and I started going through your picks, I'm like, yo, this guy's good. And he's calling this stuff right. And then, and look, I just go by what I see. So I think it's great, man, that you're helping all the people with the stuff, man. And for you guys that are in the chat room, just know that like you're getting institutional level, like analysis from Matt. Deborah, thank you for helping the little guy, Matt. Matt's all about helping the little guy, the retail trader. That's what we're about. Matt knows it.
Yeah. Well, that's great, and I appreciate that, and I enjoy doing it, and I love the educational aspect of it. And believe me, I learn something every day, and I certainly don't have all the answers, and I've been very thankful to people in the chat going, hey man, I never realized that, or I didn't notice that. That's a really good call, or sometimes frequently I also say, well, okay, be careful about this or be careful about that. It's a good point, but you need to be again trying to be educational here, but. That it's an unbelievable opportunity. I don't, again, like I said, some people just want to blame the Fed and blame everybody. It's like, okay, we can do that, or we can try to do something about it. And it was a lot harder to do it. Now we have the tools to do it. Let's take advantage of it instead of bitching them and just bitching and moaning and kicking the dog when we get home after the growth mutual funds down 40%. Let's make some profits on the way. So. Anyway, we're here. It's been about 2 hours now. Got to get to kind of wrap things up at some point. But if there's any more questions, I'd be more than happy to answer them. I'm sorry, but since I did get up at 4 o'clock this morning to be on Bloomberg TV in London,
Yeah, man. It's been crazy days in the chat room, but I'll say crazy profitable. I like that kind of crazy. So let's take maybe a couple tickers from the chat, Matt. We'll wrap it up. For those of you guys that are putting tickers, just put one per person. And Matt, if there's a trade to be made, Matt will be following up with the details on how to trade it in the chat room. If there's a trade to be made, of course. All right. And your link, coach, you're the first one. UEC. Let's go. UEC.
UEC. Well, it's funny. We did a bunch of trading in this. In these uranium things. Look at that. Okay, now this is I'm going to look at two things here. Look at hold on a second. Okay, it's called the MACD chart, the MACD chart, and this is what this is down here. Okay, now let's just those moving averages are just make the thing busy. I don't want to do it. Okay. Here we are. Got the big sell-off. Uranium obviously had the big move earlier in the year. Come back hard. Now, this was disappointing here. It made a lower high, and then a lower low. Okay, and you can see here. This is also it broke below the neckline of a head and shoulders pattern. Okay, I am still very bullish on commodities overall, but here, okay, so now it's like okay, made a high. Okay, that's okay. We tried to bounce back, but this was a feeble bounce back. It looks like it's another feeble bounce back. Oh, no, actually, we made a higher low. This is very simple technical analysis. There's nothing complicated about this. Just made a higher low. That's good. Now we made a higher high. We also had right here a positive MACD cross, and it's confirmed. It's not just a small one. It's a big one. Looks what and what that is, is when you get the 9-day exponential moving average crossing above the 12-day. It's kind of like a golden cross when the 50, people have a lot heard about that. When the 50-day moving average breaks above the 200-day moving average, that's bullish. It shows that it doesn't happen right at bottoms. And just like death crosses don't happen right at tops. It happens shortly thereafter. And it shows the momentum has really changed. Now here is look at that positive cross here. See, we had a positive cross there. Look how high it rallied. Huge, huge rally there, okay? We had a positive cross right there. When the white line crossed above the red line, look how long that rallied. Okay, we had a little head fake there, didn't do much, but a little bit of a rally. Then we had a real good positive cross down here, right? Look at that big rally. So we're getting one here. Look at this. This thing rallied really nicely today. This, especially, it got hit hard yesterday, but bounced right back to a new high. On a technical basis, this is very bullish. Now, I also turned very bullish when I mentioned on oil in October 2020, late September, early October. But I also turned on general commodities. I turned bullish in June of that year, and I'm still bullish. I think we're in a secular bull market for commodities overall. And this looks like a good move. I love that even though it made on a short-term basis, intermediate-term basis, it made some lower highs and lower lows. But on a longer-term basis, it didn't break this big low. It's starting to go back up. So this one on a longer-term basis is going to be another higher low. So we see here we had a higher high, higher low, higher high, higher low. Is this heading for another higher high? We'll see. It looks pretty good.
Okay. All right. And let's see what else we got here. Netflix from
Yeah,
Dana.
Netflix is the these guys aren't going out of business. Okay, it's not, this is people. Sometimes you talk about a repeat of or something like 2000 to 2003. I don't think anybody's looking for it to be a major catastrophe like that, but still it could be a real bad one. Netflix is going out of business, but they're going to continue to face headwinds. But look how oversold. I turned bullish down here in the stock because look how ridiculously oversold it got. See how just crazy oversold. It's starting to move back up. To be honest, again, that doesn't look like much of a move. But let's get rid of some of these lines because it is a little busy there on the chart. But let's just, it's bang. It's rallied 26%. It can definitely do a little bit higher from here. But I just think they're facing a lot of headwinds that are going to be with us for a while. And I guess my point is, on a short-term basis, it could. You see how it got? Well, let me get rid of this. Too many lines on my charts here. Okay, it got right up to its 50-day moving average and failed. Could it get that high? That's still a lot higher. Okay, and that would be still in a good advance. But it's going to have to need the overall market to move higher too. So we need to be careful. You see how it hasn't been overbought since last year. It doesn't need to get overbought for it to fail. So I just think that there are other better names. If you're looking at, let's say one other thing about this, we call about the FANG stocks. Facebook, Amazon, and Google are the ones I like more over Netflix, and although Apple I like too. But Netflix they've got some headwinds, competition, et cetera, that it's going to make it tougher for them to bounce back. But Facebook's trading at 14 times earnings. You got Google at, I think, 17 times earnings. Amazon, 5 times sales. I'm not sorry, not 5 times sales. Let's see here. Well, anyway, these stocks have become very reasonable. Will they go lower if the broad market goes lower? Yes, but they've already been washed out to a significant degree. So I think, as I said in my interview this morning on Bloomberg, is that these are good stocks you can buy. And buy them gradually every month for the rest of the year. Just one day, pick 1 or 2 days and just buy a little bit each month, all the way through. And because they're already washed out. There's a lot of technology stocks that have come down a lot, but they haven't gotten cheap. But Facebook has, Amazon has, and again, at least more reasonable. Where Microsoft is still on the expensive side. It's a great company. It's going to do really well over time, but you just have to be careful about which ones you buy. I think that these ones now with Sheryl Sandberg leaving, that gets me a little bit worried. But Facebook, they're. I'm sorry. I want to while I'm price sales. Shoot. There we go. Okay. Okay, so look at how this is price to sales is down to 2.6 for Amazon. Okay, and you go back a long way. This is much more in line. Again, it's not dirt cheap, but it's much more in line right here with years in the past, not up these crazy levels way up here. All right, before the stock got hit. So you want to buy these every year, but Netflix is again, I don't want to. If you want to trade it for a trade, if you can go a little bit higher near term, that's fine. But I think Facebook, Google, and Amazon, they are the future for this decade. They're going to continue to be great stocks and great companies and great stocks, and those are the ones I'd rather buy.
It's good stuff there. All right, and we have all right. So just to let you guys know what we're doing, right? So we're gonna go through one more ticker here with Matt. After that, Matt has to go do some stuff, and I'm gonna stay here answering questions about the chat. I'll show you the chat room and all that stuff. I'll show you the trades, everything. I'll show you how it looks like for all you guys that just joined. But we're gonna go through the last ticker here, and that is from Mike Axon. He's asking for Tesla. I don't know if this is the same person that was asking for Coca-Cola all day, all the time.
Okay, Tesla. What do they do again? Obviously I'm joking. Okay, now this stock was funny because I said, geez, if it could break 700, it should go to 800 quickly. I was right, but I didn't take advantage of it like I should have. But some people in the chat room did, which is really good. But you can see it's coming out for oversold condition down here. This our relative strength index chart down here. The question of where is it going to go next? Is it, is this running out of gas? This is what's called an outside day. I don't know if you can see it, but you see how we got a death cross in the stock. So that's a little concerning, but let's see if it can turn back up. It's only a minor one, but I'm going to get that's the yellow line is a 50-day. The purple line is the 200-day. Purple line is basically flat. Usually they both have to be declining, but that's close enough. I'm going to get rid of those lines though, and let's just look at it here. See this here? This is what is called an outside up day. Its low of the day was lower than the previous day's low. Its high was higher than the previous day's high, and it closed above the previous day's high. That's usually very positive. It's usually more positive when it happens right at the bottom. And it happens a lot less than you might think. You might think that something like that happens all the time. But this is a bullish move. So if it can break above 800, this thing's going to go quickly to 900, which we're going to need to see the broader market do the same thing. And the one thing the best thing that's happened to the stock in the last week, what has Elon Musk said? No, I mean, get back to work. That's what he said. He told his employees, get back to work. That's it. None of this crap about the Republicans or Democrats or people, the freedom of speech, all the other stuff. It's not crap, believe me. Freedom of speech is very, very important. But for the Tesla stock, the fact that he has kind of said, not said anything except for, hey, employees, you want to work here, get back to work. And like, I'm buckling down type of thing. And that's allowed the stock that's helped the stock bounce back late last week and hold that bounce. And maybe it can help it go higher. Let me just, but I want to look at it on a longer term basis. Sorry. It's going to be interesting to see if they split, because they don't want to. I was asked if I thought they would split or not, but see this. This is we've definitely seen. Oops. Okay, there we go. We see a little better. But see here, lower high, low, lower high, lower low, lower high, lower low. This could go a lot higher and still not give us a higher high. That's my concern. I guess my point is, if the market can hold up, which this bounce that we've seen the last 2 weeks, the last week and a half, could last another week and a half, and that could take the stock to 900. But it seems to me like you're going to make another lower high and take it down. This down here, when again, like I'm talking about, maybe it's in the fall. That's when the big washouts tend to take place. For a lot of different theories on why it is, but it just does. It also happens in March a lot, but obviously it didn't happen this time in March. We got a lower low. But if we get that way, this thing gets down here, boy, that's going to be an unbelievable opportunity to back up the truck and buy Tesla. So I guess for a short-term trade, it can still move higher. I'm looking for it to drop below 500 before it sees its ultimate low. And we see the weekly RSI. If we get down to that oversold level like it did in 2019, that's going to be an unbelievable buying opportunity for the stock. So I like it longer term, and it could even do better very short term. Intermediate term, I'm a little concerned about it because first of all, it's just this deleveraging access has nothing to do with the company. This is my thing on the stock, because deleveraging, it's still, as deleveraging takes place, some of these high flying stocks are going to have to fall more. And that will simply create an unbelievable opportunity for the rest of us. And so this is not a great sign right here. And it's okay. It's normal. It's healthy. It's what we need. And that and the fact that this Twitter thing's not going to go away either. It's off the front pages for now, but it'll make a comeback, and that'll probably cause a few problems for the stock as well. But that's really about it. Thanks for joining us here. I'll just finish off by saying again, what I've been some really smart people. They're not calling for the end of the world. People are describing it that way. They're not. They're just saying we're in for some tough hurricanes. They're natural. They happen. They're normal. They're scary. They're painful. But we can do more than just weather them. And that's what I'm hopefully trying to accomplish here with this chat room. And so far it's worked out really well. And I think it will continue to do that way. I hope you stay on here and listen to Rodrigo can show you the actual chat room and stuff, and you take a look. I just think that it's going to be a wild at least few months going forward, well into the towards the end of the year, and I think into next year. And it's kind of a once in a lifetime type of situation. Let's take advantage of it. And then, but it will only just not only allow us to make some money here, but it'll allow us to have the confidence to really back up the truck and really spend when the ultimate bottom comes. And when you get one of those, those bottoms like you saw in 1933, and the bottoms you saw in 2003, and in 2000 and 2009, and 1973, another 1974, another one of those just great bottoms where most people are like saying, "Oh, I can't take it anymore, get me out." We'll have the confidence to say, "No, I got some money, I'm buying, and my retirement's going to be earlier than I thought." Thanks a lot, everybody. Thank you, Rodrigo.
All right, let's go. Let's go, Matt. Let's go.
Thanks a lot, buddy. We'll see you guys all in chat, and Rodrigo will see you there as well.
All right, man. Thanks for everything, Matt. Appreciate you. And on behalf of all retail traders, man, you're the man. All right. Keep it up, man. Thanks.
Okay. Bye-bye.
All right, folks. That was Matt Maley, Chief Market Strategist at Miller Tabak, 40 years in the game. You listen to him. I asked him some questions. He knows this stuff. There's no way. Let's just be real here. Okay. I'm showing you the chat room. Okay. So this is where we're banking all this money. All right. Take a good look here. So this is the main chat room. It's blue. And you're going to see that there are some sound alerts, right? So I always have this thing open. I'll tell you one thing. If you have your email open, if you have how many times you check your Instagram, you check stuff that really you shouldn't, but then having a window like this that is actually making you money and trading, I will have this thing open all day. And if I'm not home and I'm trading, I just open it from my browser. All I got to do is go to Chrome, Google Chrome, and I log in, and that's it. I have access, and it gives me those sound pop-ups too. So couple things, guys. You're looking at the main chat room, right? This is where we are Monday to Friday. What up, Mike? How we doing, bro? Monday to Friday, 9 to 5. Well, we're there the whole day. It's open 24/7, but it's packed during the trading hours. 9 to 5, 9 to 4, right around there. So Matt typically will pop in there, in the morning. He's there all day. He's having a conversation with the members throughout the day. Matt, I know someone was we had so many questions. We can't get to all the questions because we have to go through Matt's analysis of the markets. But then if you do want to talk to someone who's a chief market strategist that actually gives research to institutional investors that pay millions of dollars for it, if you want that, all you have to do is join the chat room. It's 70% off. It's $1,800 for the year. You're not paying millions of dollars for the research that institutions are paying for, but you still get it, right? So I'm telling you, this is a hidden gem. Matt Maley's a hidden gem, and not for too long, but I'll tell you, there's a lot of hedge funds that would love to be in Matt's position when it comes to trading, that would love to be in his position. One day, I think, I don't know, he's probably going to open his own hedge fund one day, I think. He'd be bomb at it. Amazing. He's just really good. So, all right, guys. So you're seeing here the chat room. This is the inner circle chat. This is where everybody is talking, right? Meaning the members and Matt Maley. It's a conversation. It's a two-way street, right? That's the beauty of this chat room, that you can actually talk to Matt, ask questions, follow up. Hey, Matt, I'm in this stock. Should I buy? Should I sell? What do you think about it? Hey, Matt, I'm trying to get into the stock. I'm trying to set up this trade. What do you think about this right now? From a technical perspective, from a fundamental perspective, there's no question that you can ask Matt that I just don't think he's going to be able to not answer, to be honest. I hit him with every question that I could today. There's just no way around it. And honestly, that becomes a great learning experience. I learned so much today in this session. And I'm telling you that if you like this and you want more of it, join his chat room. You're there with him the whole day, literally the whole day. And he's posting entries and exits. I'll show you. All right. So that's the chat room. If you want to have sound alerts, let me zoom in here. So you see that the bells are yellow. So if I click all, that means the bells are not yellow. That means the sound alert is not on. So you just click this thing and you see the bells will turn yellow. That means that the sound, things are up. They're doing that pop sound when somebody is posting. So again, just to recap, this is where everybody's talking. This is where you can come in and post and ask questions, interact with all the amazing members we have there. I've probably signed up about 99% of the people that are in that chat room. 99% of people in that chat room have talked to me or signed up with me at one point. And I can tell you one thing about these folks. They're pretty serious about making money. We are pretty serious about making money. It is a serious item. You know, it's not a play item. It's a serious item. We want to make money. That's why we are in this chat room trading. That is the whole purpose of it, to make money trading. The gentleman that was here earlier in the day, you can go to the YouTube chat. I mean, literally, this is what he said. Let me read it back to you. And we were talking about some trades that Matt was putting. So that barber can cut. I don't know if you're still here, brother. If you're still here, that barber can cut. Let me know. But I'm just reading the comment that he put. It says, I crushed those earnings puts, then smashed earnings calls, turn around and bagged Amazon calls for 245%. No complaints here. Someone did sell at 800% on Amazon calls. These are members of the chat room. Okay. Like Matt said, you can complain about how bad things are, or you can start making money out of them. It's not that you like them, but don't look, we can be victims if we allow ourselves to be victims of what's happening financially, right? If you want to just complain and just, you know, have that mindset, that's up to you, right? But the mindset that we do have in the chat room that Matt has is a little different. We actually want to, well, if you want to improve your financial situation, it's not going to just come out of nowhere. Like, you have to do something. You either have to get better at your job, you got to start doing more stuff, being more productive, right? In this case, if you're a trader, let's say you could have whatever job. It doesn't matter what job you have. You could be working at a grocery store, gas station, mechanic, plumber. It doesn't matter. You can come into this chat room and learn with Matt and just mirror his trades. You're not in the chat room to make your own trades. You can do that by yourself. You don't need this chat room for that. You're in this chat room because you want to follow Matt's trades. Matt's 40 years of experience in trading. And we can all get self-confident and lucky here and there. I know all about it. I'll tell you, sometimes experience is just, it's obviously that we would all wish that we had 40 years in Wall Street, wouldn't we? Wouldn't, like, I don't know who wouldn't want to have that bank of knowledge that Matt has, like packing. So reality is you just can't get it unless you live through it. And he's lived through 40 years as a trader and an analyst in Wall Street. He's on CNBC and Bloomberg all the time. And they bring him because they ask him serious questions like, all right, you know, we're tired of pumping. So like, what's really going on, Matt? You know, so I'm telling you, I don't watch any of these news places unless it's somebody that I know that is there. Because they do bring some smart people here and there. But the talking heads are just, you know. That barber can cut. Now, so that barber can cut after all that money he made. He's writing AMD calls and they're already a home run, still in them from what he says. So that barber can cut. I don't know what your handle is on the chat, bro, but that's amazing, bro, that you've been just making so much money. And I feel so happy for you. I feel so happy that you've been able to make that money. Because unfortunately, that, you know, we are living in tough economic times. It's not made up. You're seeing that Netflix, Robinhood, like a whole bunch of companies are starting to lay off people. And on top of that, they got hiring freezes. So you have a lot of hiring freezes happening. I'll tell you how this works. The hiring freezes happen first, then you'll get the massive layoffs. But then if it doesn't go the other way around. You don't hire people and just you fire them again the next week, right? So hiring freezes come first, and then you get the massive layoffs. So unemployment's going to go higher, I'm pretty sure. And there's going to be a lot of people out there that are going to be trying to find ways to make money, right? There's people listening to this that want to do that as well. Like, that's, if you want to make money, join this chat room. I'll put it to you that way. But if you don't want to make money, if you're not really like, you know, if that's not really not a thing, that's fine. Don't join the chat room. But if you are serious about trading and you want to start making money with Matt, if you want to be part of a greater community, something bigger than just trading by yourself, join the chat room. It's a great community. I know these people, they're amazing. There's so many good traders there. Tiff, J Trades, Tammy, I think Day Trader Mom too is there. There's so many like great traders out there. And honestly, it's once you're trading with Matt, you're going to start picking up on things and you're going to start becoming a better trader. You won't even know it, but it's as you know, we kind of learn when we see it, right? It's like when you coach someone, when you train someone, you train them and you actually know how to do it. That's why you are training them, right? That's why you are coaching these people. So same thing, right? That's basically what Matt is doing. You're mirroring the trades that Matt is doing, but at the same time, you're getting live coaching, live trading analysis with Matt. The schedule is Monday to Friday, 9 to 5 p.m. all day. I don't know how many, I'll tell you, Matt's time is way much more than $1,800 an hour. or whatever a year. I'll promise you that. So now we're very flexible with the pricing here at Benzinga. A lot of other places are going to charge you $10,000 a month for some garbage and not even close to what you're getting here. I'm being real. I'm being honest. That's the truth. Knowledge equals wisdom. PR 787. You're talking right, man. I like it. I like it. Knowledge is wisdom. Absolutely, man. I mean, what's the point of making all this money and you don't even know how you made it? It's like you're probably going to lose it, and you will very likely if you don't know how you made it. Okay, so I was showing you the inner circle chat room, and now I'm going to show you the Matt's important messages, which is where Matt is posting his entries, his exits, his market commentaries. He put a real nice thing here about risk management. I like it. And he talked a little bit about today. One comment on risk management, he's like, I have to consider high risk tolerance. I mean, you get more than just trades is what I'm saying. You get Matt's market analysis and other, I don't know how to call it, but like just other stuff that as a retail trader is going to help you be more complete, right? Be a more complete trader. Like, for example, my problem with trading is that I will have a hard time letting go. So like if I'm up on a trade, I probably won't take profits and I'll just maybe hold it for a bit, hoping it rallies sometimes. That's where I need to improve, right? But then somebody else might not have that problem. Maybe somebody else has a different problem that maybe every time they buy the stock, it just tanks. And that maybe you can, work on the technical side of things, right? On the charts. So there's skills that you're going to be developing as a trader as you go. That's just how things are. You have to be in it to kind of, go through it, to live it and learn it, right? So you'll improve as a trader. I've seen so many people make so much money. It's like, just that FXI trade. Some people made 14,000%. Like, that's insane. That's insane. So if you want to change something about your financial situation, if you want to improve your financial situation, trading is a great way to do that, where you can make like additional income regardless of what you do. I'm telling you, because like I put in like 15 hours a day here. I'm pretty busy and I still find time to trade. And it's just more, it's just more money, right? Ultimately you want to have money, right? Because everything is becoming so expensive. And you can do two things. You can sit on the sidelines and complain, or you can actually do something about it. And the fact that we're even giving you a 7-day money back guarantee on this is insane. I don't even know until when we're going to have that money back guarantee, but it's just, in my opinion, we shouldn't even have it, because we know that people are making money there. But hey, if you're on the fence, that's why we have it there. So take the 7 days, try it. Like you said, you remember that comment on the YouTube side, that barber can cut. All these other people in the chat, look at it. These are users, okay? They make their money back. I'm not saying everybody does, but many users, and they're posting it on the chat, have made the cost of the subscription and more, even within the 7-day money back guarantee period. In 7 days, people are making more than what they make in their job in 3 months of working. You tell me, right? So the opportunities are all around, okay? The opportunities are all around us. It just takes a little bit of a good eye to know which ones are worth it. And I'm telling you, I have a pretty good eye for this stuff. And if you're seeing this and you're not a member yet, I would really, really, really encourage you to give this a shot. Like, I'm a trader myself, and I joined Benzinga as a trader, and I'm still a trader. I love this. So being part of Matt's chat, being in the chat room with Matt, it's hard for me to quantify, but he's probably made me within the past month around, I don't know, maybe like $50,000 trading. I'm just being 100% honest with you guys. I've come here, I've shown you the trades, I've shown you my P&L, like when I'm in Matt's chat room, and I'm not trading all day. I'll make a quick trade here and there throughout the day, but that's it. And you can do that. There are a lot of people that trade that have a full-time job or have a part-time job, and they just go in there for a trade. So, don't tell me you can't do it because you got a job, because I work 15 hours a day, which is double what you should, 8 hours a day, and I still find time to trade. So it is possible. You can do it. You just have to get in. You just have to take that leap, right? Like you do with everything else in life, right? So this is the chat room, guys. This is where you're going to see Matt posting entries, exits, all that sort of stuff. If he's buying a call, he's going to be exact about this. Okay. No hypotheticals, no maybes, no talk to me in 1 week. No. Right now, you get the exact entry and exit. As an example, right here, you can see that he's adding, okay? He's going to add small to the SQQQ June 3 $49 calls. Apple failed at 150 again. If I want to look at Apple right now, all I got to do is go here. Oh, shit. All right. Okay. So yeah, you see there's a lot of stuff happening there in the markets. We'll see. And that's basically what you get, right? Right? When you get a clear, this is clear entries, clear exits, the exact contract price, expiration, symbol, and more importantly, the timestamp. So some people were asking like, hey, why isn't there like a live, like, I mean, Matt Maley is a chief market strategist. You just can't be, like on camera 24/7 with you, but you have him in the chat room the whole day. It's the same thing. But I'll tell you why this is better and why I've had some really, really good results. Me as a trader, I'm talking to you as a trader, okay? Let's get this whole thing aside. I'm talking to you as a trader one-on-one. The reason why this has helped me make so much money, and it's helped so many of these other traders make money, it's very simple. All you have to do is follow Matt's trades. Just follow his trades, and you get the exact moment when he's buying it, selling it, adding, taking off, everything. You get it there. So if you would be in a live webinar, if you'd be like in a live screenshot, whatever, if he were to announce it verbally and you just go to the bathroom for a minute and you come back and you missed it when he said to get out, are you gonna be a little pissed? I mean, right? So what can, and we've thought about all this stuff already. Like, that's why we've made it this way. And that's why, let's say you leave for a minute or two, you come back, you have the actual timestamp, you have the actual post with the trade. So you don't have to be, like in a live session, nothing like that. The chat room is a live session. It is a live session of Matt. He's posting his stuff live, So you get all of that included, right? You get the entries, the exits, all that stuff. And this is really important because if you are a new trader, don't get discouraged, because this is the simplest type of trade you could make. Honestly, like, you buy a call and you buy a put and you sell it when you want to close it. It's the same damn thing as when you buy a stock and you sell it to close it. It is the same concept. And you don't need special approvals or nothing like that. The majority of people can trade buy calls and puts. If you want to do more complex stuff, if you want to do more, spreads, butterflies, all that stuff, it's not what we do in the chat. It's not what we focus on in the chat room. But if there is an opportunity to make money with that type of trade, you can ask Matt. It's trust me, he knows all about this. It's just that we do what makes us the most amount of money. If you haven't noticed, Matt's pretty aggressive on the money side, and I like that. I like that because I feel similar to that, right? Where it's like, instead of him trying to weather the storm and tell you, oh yeah, just go by, Google and go to sleep, right? Instead of doing that, he's literally embracing the volatility. Oh, we got a crash, bring it on. I already know how I'm going to make money with this. And one of the things that I learned this year that has helped me a lot to become a better trader is to short markets. I mean, if you're not shorting markets, I don't know what you're probably losing a lot of money. You've lost a lot of money. But like half of what I made in the past 2 weeks was shorting. You trade both sides. You can't have any emotions. And that's really something that, I struggled with at first. Very optimistic, very, hope, whatever. But ultimately, you have to understand that, like, you're trading, right? You're trading. Get it right. You're not investing here. Unless you're buying for 10, 20, 30 years. If you're doing that, you're investing. But we're not doing that. We're buying today, and we could sell even the same day if the thing goes up 100%, 200%. Why not take profits, right? So of course, if it happens the same day. Now, I'm saying the majority of the times it doesn't happen the same day. It could be the day after, right? It could be the day after, or 2 days after, 3 days after, or it could be a week after, and we're adding to our position as we go so that we can get a better entry price, a better price on the trade. So shorting has helped me to make a lot of money. And I think, Matt, look, we don't care if the market's going up or down. I could care less if the market falls 100% or 900 or 90%. I'm still going to make money on the way down. And if it goes up, you can also make money on the way up. So So yeah, I mean, that's what I'm saying, like just some people, I mean, it's okay if you don't like to short, but I mean, do you like to lose money? I mean, I guess you have your answer right there. So we are in a bear market, if you haven't noticed. So this is where you see the entries, the exits, all that sort of stuff. Um, and there's a Tuesday session, and the session is at 11, I think it's 11:30 a.m. Eastern, and or 11 or 11:30. I think it's 11:30. But basically you meet with Matt every Tuesday and you have a full like 40-minute, 1 hour, 1 hour 30. I mean, as long as he wants to go, he has full flexibility to do that. I'll tell you one thing, these meetings were only 30 minutes before. I made a couple changes on the Zoom thing, and now Matt can go on for hours. He doesn't go for, I mean, he's but he goes for like an hour, 30 minutes, that sort of stuff on Tuesday. That wasn't how it was before. It's not how it was before. So it just goes to show you guys that we're committed to what we're doing here. I am committed. I'm fully committed. I'm doing this stuff sick and I'm having a great time. It's not the first time, but that just goes to show you how committed we are here to making sure that things work for you. Right. So just like that meeting, little things that make such a big difference in y'all's account and trading, all that stuff. Like I'm always pushing for upgrades. I'm always pushing for improvements on this stuff, what we can add, how we can add more value to our users. Like, I mean, we're already giving you a ton, I know, but we just want to like just give you more stuff because we honestly want to help you, right? We come from our approach is a little bit different, and we do our best to try to work with every trader. That's why you can actually communicate with Matt here and get help if you need help. I don't know, whoever's listening to this, if you've blown up your account, you're not the only one. I blew up my account twice when I started. It happens. And I've talked to about 7,000 traders since I've been here on phones or by email from all over the world, literally all over the world, Africa, Europe, I mean, Central, South America, Canada, everywhere. And you see that we have a lot of things in common as traders, but obviously we don't know because everybody's trading from their own place, whatever. But once you join a community like this one, you're gonna see like almost like an immediate change in just how you approach the markets. Stop doing this by yourself. Stop trying to trade by yourself. You're doing what I call vacuum trading, right? You're trading in a vacuum, and you're just basically, giving yourself ideas and when you don't really have that outside feedback, right? You can get a little bit caught up in your own stuff. So, um, so yeah, guys, I mean, join the chat room, try it out. I mean, look, you can make money with this. Why not? Like, if that's all you got to do, like you have 7 days to try it, full money back guarantee. If literally somebody comes up to you and tells you, hey man, this can actually help you make like some good money. Would you be like, no, 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 I have money? No, I don't like money. I don't want money. Who wants money, right? Is that going to be you, or are you going to be like, oh really, let me get a little bit more information about this, because guess what, I actually want to make some money. So if you want to make some money, I think you should join the chat room, join the family, trade with Matt, learn from him. There's so much you can pick his brain on. It's just endless, and the amount of the knowledge that you're going to get from this is already enough by itself, like without giving you any trades or nothing, and still cheap. So so yeah, guys, as a trader, I'm just giving you some advice here, like a personal advice, right? If what you're doing is not working, and you keep doing it, right? And you just, I don't know, you think you're going to get lucky one day and the market's been wrong all this time, right? And then, but suddenly it's going to be right for you. If like if what you're doing is not working, if your P&L is not where you want it to be, if you are down 50, 80, 90% on your account or more, it's number one, you're not the only one, right? And then just know that it doesn't always have to be that way. I did feel that way. I'm not gonna lie. I felt like this is freaking, what's the point of this shit, but then I started getting a little bit more educated. I started hanging out with Matt and stuff and going through his ideas, his trades, his approach on the markets. And then little by little things connect, right? That's just how things go, right? Little by little things are going to start connecting. Sorry. Little by little things are going to start connecting, right? And then you're going to start seeing, oh, well, that's why that happened. Well, damn, I could have made money if I knew that. Okay, well, you didn't, but now you know, right? So like now I know how to short markets in a very high leverage way that if it tanks, I'm in, I'm out 15 minutes later, and that's it. And there's just a lot that you can learn from Matt. And I'm probably the perfect example of it. Like, because I blew up my account twice when I started. I'm Mr. YOLO trades. Like I have a very high risk tolerance on my trades. Um, and it to me it was the timing, the problem. It was the timing of my trades. And to be honest, Matt has some pretty good timing. I mean, how the hell are you gonna like accurately call the past four corrections? You call the past this crash. Um, and not only that, but he's making money on the way down and making money on the bounces up. Like, I've never seen somebody like Matt, just gonna be 100% honest. This guy's a monster. He's a beast. He's a beast. Like, and I don't say that lightly. I don't say that about anybody. But I'm telling you, Matt Maley is a monster. This guy's a beast. So take my word for it, because honestly, you never heard me say that about anyone. But give it a shot. 40 years of experience. He knows a lot about the markets. That's why he's on CNBC and Bloomberg. But you can see all the trades. That's what, that's really why I like it a lot and I use it a lot, because it's so simple for me to get in there. Like, I'm literally doing a whole bunch of stuff here right now, and I have this chat room open always. It's a window that makes me money, right? I mean, you open your email for work because, that pays you, right? Well, guess what? This chat room pays you too, right? I don't know how much the chat room is going to pay you. It varies, but it pays, and it pays well. Ask the chat members. So give it a shot. If you want this to be your full-time career, there's no better time to join. You have a 70% off, and keep in mind, you are getting a free laptop if you join. So if you don't see a laptop on the checkout, that means that we're out of laptops. And, chips are pretty hard to come by nowadays. So we might just take off that whole laptop thing. I don't know. We might run out. But I want to give a couple shout outs here, because I've definitely missed a few of you guys. All right. Well, I mean, there's no name here. Samuel, you already got the thing. Okay, Sam Osborne. Sam Osborne, are you in the chat? Are you in the Zoom chat, or are you in the YouTube chat? Sam Osborne, 1-1. Calling Sam. Welcome to the family, brother. Let's go. Okay, sorry, man. Just a friend was texting me there. So, Sam, thank you for being part of the family. You and me and Matt. I want you guys to know something, right? Again, remember, our approach is different here. It's not like how it is in other places, and it's for a reason, right? It's for a reason. I went over that before. But we really are like a small family. I'll tell you one thing. This is like my family. Like, Benzinga is like my family, right? It's not. I don't see it as a job. Um, and I think that once you actually become part of this, you're gonna get what I'm saying. It's hard for me to explain that, because it's more of like a feeling, But I think that if you join, you're gonna get what I'm saying, where it's like you feel that camaraderie, that friendship. People are like, I mean, I'm just telling you, like, you would make friends too if you're making money together all day with people in a chat room. It's like, it's kind of crazy to think that you can actually make so much money just by having a damn chat room open. I'm serious. Like, it's just crazy. Like, numbers don't have the same meaning to me anymore. And it's all because, the gains that you can make in this chat room. So, like, for example, here's why I like this. Here's why I love Matt's strategy. Here's why I love this chat room. It's my favorite. It's the best. And here's why, because if Matt is right, so like if I make a bet or a trade, whatever you want to call it, and I'm right, I don't want to be right 5%. I want to be right 50, 100, 200%, right? I'm still going to be right if the stock goes up or down, right? You're still going to be right. It's just how much you make from being right. And that's why I like the chat room. That's why I love the stuff, because if I'm right, if Matt's right, more importantly, if Matt is right and we are right with Matt, then instead of making a 5% or 3% or 6% on a stock, which is all right, don't get me wrong, but some of us want to make a lot more money than that. And that's really why we are in this chat room. So look, if you want to ask Matt, like, hey Matt, what's a good stock I can buy? You can ask him, and he can give you, Matt, what's a good stock with, good free cash flow, good operating margins, low to no debt. If you, I mean, you can ask whatever, you can ask him whatever you want. Like I literally asked him everything I could, and and he's always going to give you an answer. So some of you guys might want to not only trade these options, but some of you guys might also want to invest in some stocks and buy some high quality names. And look, I get it, right? I do that too. You ask Matt, like, hey, Matt, what are the top 5 companies that are going to be here? Well, I don't know. Not going to be here forever, but what are the top 5 companies that I could buy to hold for a 10-year period? Okay. You can ask him something like that. You can ask anything you want. That's why we have the chat room. So like if you see people are just posting whatever they want, hey, like, hey Matt, like, what do you think about this? What do you think about that? Or hey Matt, we have um, this is happening. This is happening. How can we trade it? Like we've made money on oil on the way up and down, on commodities, on so many things. It's just and just, I mean, I just got to give credit to Matt because he's a monster at this. He's been doing it for 40 years. So I respect that a lot. If you do something for 40 years, you're a career man, you're a career individual, you're dedicated, you're committed to what you do. And you really must have a passion to go that long. Some people can't even hold a job for a freaking month. You got to tell me this guy's been there for 40 years and he's a monster at this. And he's well known. He goes out doing interviews on Bloomberg and CNBC. So I just pay respect to someone that has dedicated his entire life to learn a craft, master it, and then now help retail traders, help the little guy that doesn't get help from anyone, right? All the little guy, I guess, is just confused from watching CNBC and all these places. There's really not a place where you can go in there and actually become a better trader. If you're just trading that stuff, you know what's going to happen, right? Like there was this lady who I talked to on the phone. And it's very unfortunate, but this is really why you have to be careful about what you see on the major news places out there. You always have to be careful. So I talked to this lady. It's a real story. This is a true story. Like for example, CNBC was talking about a Christmas rally, and they were pretty dead on about it happening. They're like, it's going to happen, like it or not, it's going to happen. We always get a Christmas rally, and I guess that means we're going to get it now. And well, it turns out that this lady, that's what she was watching. She was watching that. And unfortunately, she bought like a lot of like $50,000 or $60,000 in calls. And she was waiting for this Christmas rally to happen. And when I talked to her on the phone, she's straight up like, where is this rally? Like it's supposed to come. And it's not supposed to come, like, so that's why you always have to be careful about what you're seeing out there on the news. And so now how can you prevent that? How can you like be a smarter trader? How can you pretty much work your way around that? See it, but maybe not act on it, right? You can join a community of traders. Because I mean, do you think that, when you want to be like, I mean, there are some rare cases, right, where you have some people that are geniuses, but for the most part, for like the big majority, if you want to be good at something, you hire a coach or a trainer or something like that. Like if you want to be number one, if like you want to be the best, you train, you get a coach, you go to the gym, you want to get fit and buff, go to the gym, you work out, right? So it's almost like that same concept, right? And I'll tell you that every moment you put into this chat room with Matt, it's going to pay off because you're always going to be learning something every single day. I'm telling you. And I'm at the point in my trading that I'm very selective. I've cut out a lot of garbage that I don't want, that I don't need, that actually only hurts me as a trader. Like I don't watch CNBC. I don't watch any of those places unless Matt Maley is there or some really smart guy is there. That's the only time I watch it. And I don't even, like I'm busy with you guys here. So, but that's one of the first things I do, just cut off the news, cut it off because it doesn't help you. It actually hurts you more than it helps you. And you don't even realize it at first. And then how can you prevent that? Very simple, man. Very, very simple. Join this chat room. I'm telling you, like save yourself blowing up your account like I did twice. And look, it happens to a lot of people. I'm not shy of talking about this. I'm not afraid of talking about this. I'm very open with this because I think we can all learn from this. And nobody wants to admit that. Nobody's going, people have egos and things like that. But like, if you talk to the people I've talked to on the phone, if you talk to like the 6, 7,000 people that I've talked to on the phone about trading and about their performance, and um it's different. You will get I mean, I have a really good picture of where retail traders are, and as a whole. So this stuff that we do here is meant to help you guys. That's really the whole point of it, to help you guys make money. And like Matt said, not just weather the storm, but you can actually make money on this. So like I said, I don't want the markets to tank. I want, things to be perfect, right? Don't we all? However, that's not the world we live in right now. And we're probably going to see some more pain in the market, very likely. Um, and if that happens, I just want to ask you a question, two questions. Do you want to make money when that happens, or do you want to lose money when that happens? I mean, that's your answer, right? So if and here's the thing, it's the way that Matt shorts buying puts. It's so simple and easy. It's not like he's not shorting the stock. He's buying puts, which is the recommended way of shorting, right? So um I want to thank all you guys for being here, for the bottom of my heart. Thanks for being here. We've had a great session. I'm glad that some of you guys were able to meet some of the members on our YouTube chat. I'm glad that they come in there and just let you guys know what's up. And feel free to join. There's a 7-day money back guarantee. I don't know how else to put this. Like, I mean, it's literally you can go in there and make money. And if for some reason whatever happens, you get your money back, within the 7 days. So um, the next 7 days are going to be very, very volatile. And I would say the week afterwards as well. And whenever you say volatility, it's like just know that that means that we can make a lot of money during those times. Some people want to stay out of the volatility. Oh, Fed guy is going to talk. Let me sell everything I have. I don't want to be in the markets right now. I'll have to wait, see what happens after. Or you can you can trade it with, the options, and you can make a ton of money on it. And because the volatility, I'll put it to you this way, volatility used to be my enemy. At this point, volatility is my homie. Like, we're best friends. I'm looking for this guy wherever the hell he is. So when he's coming, when volatility comes, I'm ready. And I want it. I want volatility on either side. It doesn't matter. And that's really how we make a lot of money in the chat room, with the volatility in the markets. And I'll tell you one thing. I guarantee you, the volatility is never going to leave the markets. It's just part of the markets. There's always going to be stuff happening out there. Today, it's Ukraine, it's inflation, it's the Fed. 5 years from now, it's going to be some other stuff. Okay. 3 years from now, it's going to be something else. Maybe, I don't know. I mean, this could be a really bad time right now. We could be in a bad situation for years to come. I don't know. But I'm just saying, there's always going to be a theme in the markets. There's always going to be volatility. There's always going to be a new company go on public. There's always going to be stuff that you can trade. What matters is that you know how to make money out of that, right? All of these things that are happening right now in the world, they suck. They really suck, But as a trader, you need to know how to be on the right side of the trade. No feelings involved. This is just trading. It's your job. It's what you have to do. You got to make money. So I mean, do we want the markets to go down? No. I mean, will they? Very likely. Do I want to lose money when that happens? Hell no. Do I want to make money when that happens? Yes. So I'm just giving you guys a couple things that I have learned from my experience as a trader. Some things that I'd have to come to terms with, that even though I don't like to short, sometimes I'd rather short than lose money, right? And that's just kind of my kind of road, right, as a trader. And I'll tell you that a lot of the good trades that I've had and everything, it's mainly due to Matt, because I've been following him for a while. And as a trader, you probably already know I trade his picks and stuff, and they've been pretty good to me. And I mean, that's all I can say, right? So all right, guys. So I need to do one more shout out here. Okay. So we got another shout out here. Sam Osborne. I got another one for this guy. He signed up for 2 things. Sam, I'm going to give you another one, okay? You're the only one in the history of what we're doing here that has gotten 2 air horns. So you're special. Um, okay. All right, guys. This has been amazing. All right. This has been a great session. I want to thank everybody for being here, for engaging, just for listening. Matt's such a smart guy, and just by listening to these sessions, you can get a good grasp of what's going on. I do my best to ask him like relevant questions about what's happening. Keep in mind, I'm not a reporter. I don't work at CNBC. Like, I'm not a reporter or a journalist. I am a simple trader. I am an average dude. That's it. That trades, and I want to get the real news. I want to get the real stuff. Like not what the main uh, news places out there put about what's going to happen to the markets, because they've been saying we've been bottoming for the past 6 months or 5 months. And that's that, right? So yeah, I think you should join the chat room. And if you have questions, I'm going to put my contact there. Um, but yeah, guys, just take trading like it's a career. Like, don't treat it as a casino. Don't treat it like nothing like that. And just want to bring somebody over here. Just wants to say hello. His name's Simba. So he just wants to say hello, and he wants you to join the chat room. So you can be with us there, right? We're hanging out. It's me, Simba, Matt, and everybody else. We're hanging out, and we're just making trades all day. So, guys, I hope I can see you on the other side of this. I hope I can see you in the chat room tomorrow. I already know who I'm going to see there. All the shout outs, all you guys that joined. I wasn't even able to get to all the shout outs because so many of you guys popped in here. But if you have a question about the chat room, like, don't wait. Like, keep in mind, we are closed right now. So if you do have a question about the chat room, put it in the chat here, and I can answer it live. And if anybody else has questions about that, ask it before I do close this thing, so that you can get an immediate response. By the way, as soon as you get the chat room, you're going to have immediate access. What do I want you to do as soon as you get the access to this beautiful baby? Okay, I want you to go in here to the inner circle chat. Just take a quick breeze. Just breeze around and see what the folks talk about. Right? What do they talk about? Lulu, Tiffany. Did Tiffany make another of these insane trades again? Lulu. We're gonna have to reach out to Lulu. Well, this looks pretty nice. Man. So I guess he has calls. I'm assuming that Lulu has calls. But I'll tell you, I think it was Tiffany. She made like a 4,000% gainer on target puts, and then she made like 2,000 on Ross puts. I mean, and these are trades from like the chat members. Like, these are these are like the chat members that are like doing this. And keep in mind, like, we're trading. Look, remember I told you volatility is like my homie, is my best friend. Earnings is like Mr. Volatility, right? It's like top dog volatility earnings. So, it's kind of a gamble, let's be honest, when you're actually doing that. But to be honest, I've just put a couple $100 in that, and something like, if it's up 1,000% or I lost $100, that's fine. Know what you're doing, right? And why you're doing it. But hey, sometimes when you win, it's pretty nice, right? Okay, Zule. I don't know this guy, but it says I sold my TQQQ calls way too early. Me too. I'm okay with it. All right. It's okay. It's fine. I mean, we don't always sell at the top, and I mean, who the hell gets the top all the time? Let's be real. All right. David, this guy got a trade. So like, I know a lot of the members here, right? Just, I think you can get an idea of how, like, we're like a small family here, it's like a small family, and we're all trading together, and it has that camaraderie feeling. David, this gentleman right here, I've talked to David quite a few times. He's a smart trader there. And he made this trade. I don't know what it was. David, if you're here, remind me what that trade was that you did, that you made a 10x on that trade. I don't know if it was TQQQ. I don't know what it was that you were, what is it that you bought? But I remember that you did like a 10x. I think it was like 2 weeks ago, something like that. So this is Matt. You see Matt is posting here on the inner circle chat too. So that's where all the traders are talking, right? In Matt's important messages, only Matt can post, right? So you don't have to scroll. You don't have to scroll like just trying to find that stuff, right? You pretty much have the trades there. And that's why like I wanted it to be that way so it could be more organized. Remember I told you that I'm like constantly thinking of ways to improve the chat room to give you a better experience, which ultimately leads to you getting more out of this subscription, getting more out of Matt Maley's trades. Before it was just one chat room. And then now we got two. So it's one just for Matt to post his entries and exits, and only he can post. Super easy to follow, super easy to, and then you got the other chat room where everybody's there. Ever since we switched to this format, people have made a ton more money. It's just easier to follow, right? So if you want to change your name or whatever, you can do that here. You can put a picture that I put my picture there. And you can even update your credit card stuff here, right? So you don't miss out, right? Imagine like you're on a trade and they suddenly wake up and you don't have access to the chat room with Matt. Like I swear, it's like sometimes I panic when I'm trading and I'm not in the chat room with Matt. It's like I like being there. I don't know. I like being there, even though I got to do stuff here. But when I'm trading and I'm there and Matt's there, it's just a good feeling, right? You feel like you can get an answer right away instead of just ripping your hair out by yourself. So, okay. I think we got another shout out coming. Hanley, got to give a shout out to Miss Hanley. Welcome to the family. Let's go. All right, guys. There's too many people to give shout outs here. There's only so much time in the day, but I'm just going to leave you with one thing, right? Sometimes when you're trading and things are not going your way, it's okay to admit that you need some help. It's okay to ask for help. We all struggle with this. I struggle with this. I hate asking for help, to be honest. However, trading has humbled me a lot, especially when I blew up my account twice. So those lessons that you learn through those, tragic things that happen, you don't have to learn that way. You can actually learn by simply not doing those things, because that's not what we're doing in the chat room, where it's like you're going all in with all your account on a penny stock, or, so I really think that you should just look at trading from a emotionless perspective, where it's like you're just trying to make money in the market. If it goes up or down, it doesn't matter. You can make money on both ways. So that's what really changed my whole trading, because otherwise I was just trying to get bounces and bounces and bounces, and things ain't bouncing. So yeah, guys, I want to give everybody a big shout out. Thank you for being here. I'm really glad that you guys, are paying attention and trying to improve your trading. We know that you're here. You want to know what's happening with the markets. That's why we do these things, right? We don't have to do them. We do them because we want to help you guys. That's why we do that. So shout out for everybody that's here in the chat room. Much love for you guys. Let's go. Join the chat room. See me in the chat room. Let's go make some money in the chat room together. Isn't that fun? And then, forget about this whole thing that things are, bad out in the economy and all that. That doesn't mean that you have to go through that. Okay. If the economy is not looking good, that doesn't mean you have to do bad. That doesn't mean that you have to do bad. We could be in a recession and you could be in this chat room making money. And I'll tell you, it doesn't feel like a recession when you're making that money in the chat room. So balls on your court. Whatever you want to do as far as your trading, that's up to you. If you want to join this community, if you want to be part of what we do here, part of what Matt Maley does, live trading Monday to Friday, I think you should join. If you do want, if you've been doing the same thing over and over again and you keep losing money in the markets, you can't get a good winning streak and things aren't working. Maybe you're new. Maybe you just started trading. I really think that you should take a look at this chat room. You have a risk-free 7-day money-back guarantee. Nobody does that. Like, who is doing a 7-day money-back guarantee during a recession? Who? I don't know. Nobody. And the other places that did, the other, if you want to call them competitors, they took off their money-back guarantee. I think Benzinga right now is the only place that has a 7-day money-back guarantee. I'm not kidding you. If that doesn't tell you something, I don't know what will. Okay. I brought Matt Maley here for 2-3 hours We talked about the whole markets. We showed you the trades. You listen from the chat members. You have a 7-day money back guarantee. At this point, if you don't want to join, I think you just don't like money. That's all. So if you have questions, reach out. I'll put my contact there in the chat, folks. Have a great weekend. Stay safe. Much love for you guys. Mike Accent, I see you, bro. Keep learning, keep pushing. You're always, man, I just love seeing the participation from you guys, you know, even a year after we started doing these sessions. So thank you, everybody. Have a great day. We'll see you very soon in the chat room. I hope I can see you guys there so that we can make some money and trade together. Shout out, folks, and thanks for being here.
tell you, oh, baby, it's time. You are my bread and love, baby. You are my light in the dark. It's time to tell you, you are my bread and love, baby. You are my light in the dark. It's time to tell you, oh, baby, it's time. It's time. You are, baby, you are my light in the dark. It's time to tell you, oh, baby. You are my bread and love, baby. You are my light in the dark. It's time to tell you, oh, baby, it's time.
Run. One with your life, not behind the scenes, on the streets. The shadows broken, swept away, swept away, swept away. Run with your life, not behind the scenes, on the streets, the shadows broken. Downstairs, the animals are dancing.
Tragedy.